Hello and welcome. You're watching India Market Close with me, Soumit Sarkar, and my co-anchor Anushi. Well, Anushi, if you look at the markets, the Nifty is largely flat, not much of a volume that we are seeing. On the loser side, we have the pharma and the auto stocks that have been dragging the index, while on the gaining side, it's IT and banks which have been holding the fort here.
Yeah, absolutely. It's been a lackluster day in terms of where the benchmark indices are concerned. If we are looking at the Nifty 50, currently flat in trade is what we are looking at. In fact, if we see some of the stocks which are in focus currently, over 0.05% of an uptick is what we are seeing for Nifty 50. If we pull out the point contribution table to see which are some of the stocks in focus, we have Kotak Mahindra Bank right at the top, seeing about a 3% of gain, and this is on the back of its Q1 business update. But it's HDFC Bank and Infosys also positively contributing, while Titan is something which is not doing so well in trade today, and it's on the back of its Q1 business update. Reliance Industry, Axis Bank and Bharti Airtel, some of these other counters which are leading to some bit of that pressure on the Nifty 50 is what we are looking at. But in terms of where the sectoral picture is concerned, let's pull that one out as well. We have Nifty Realty right at the top. 0.8% of gains is what we are looking at, while Nifty Finance, Nifty Bank up over 0.3 to 0.4%. While on the losing end, we have Nifty Pharma and Nifty Healthcare down about 1% in trade today. Also seeing cuts or seeing some bit of pressure in terms of where the US deals are, tariffs have been concerned. So some bit of pressure building onto that front. But if you look at the broader markets now, we are seeing deeper pressure over here. In fact, if you look at the small cap and the mid cap 150 seeing cuts of over 0.3%, while for small cap 250, we are seeing cuts of over 0.4%. So some bit of recovery in the last half an hour or so we are seeing, but still in the red is what we are looking at. In fact, let's also see the BSE 500 to get a sense on some of these stock-specific action that we are looking at. Right at the top, we have Alok Industries, Sonata Software up over 7% to 12% in trade today. Other counters like Aavas Financials, Lemon Tree are also in focus, seeing gains of over 4 to 5%. While what's not working out so well is clearly Titan. Now it's down about 6% in trade today. In fact, we'll go in more detail in what's happening with Titan and why it's seeing this kind of a downtick in terms of where the Q1 business update is. But Jubilant Pharma, Galaxy Surfactants are also some of the other counters that are seeing about 3 to 4% of cuts today. So that's the overall sense that we are seeing in terms of where the benchmark and the broader market indices are concerned. But with that, let's welcome in our guest for today. That's Kush Bora, the founder of kushbora.com, joining us. Kush, clearly it's like, as we said, it's not much of an excitement in terms of where the benchmark indices is concerned, but broader markets seeing some bit of pressure. That talk to us about the overall market activity which is taking place today and your picks as well.
Hi, Amishi. First of all, very good afternoon. Picks at 12 and slipping lower. What else do we expect in the markets, right? So I think this is par for the course. We've been discussing how markets could consolidate until you get this one big trigger. VIX also starts to spike and the markets, get a new burst of life. Could be either way, but our guess is that this will be on the higher side given the kind of the data setup and the support that the Nifty has been taking for some time. So 25 400, 25 500. This is the range where this is in fact the support zone, and we've seen consolidation within this band. In fact, if you tie this up with the weekly options expiry data, for this week, then 25 500 calls have seen a fair bit of writing, and then 25 400 puts have seen a fair bit of writing, and we're seeing consolidation. And one just wonders, with everything that's happened with Jane Street, are we going to have a quiet weekly expiry at least this time around? In all likelihood, we just might. So yes, consolidation for some more time, par for the course. View remains bullish. Once we get a breakout, it could well be on the higher side. And then 25 700, 25 900 are your targets on the upside. This view will be negated if 25 250 on the downside is taken out for whatever reason. So all in all, still bullish. Plenty of stock specific action. So I think the action and focus should shift, on stocks rather than the indices, Nifty, Bank Nifty both.
And Kush, what's your view when it comes to Nifty Bank?
Very similar, Samit. If you see the moves that Bank Nifty is made, now I talk medium term. You look at the you look at the recovery that started in March. Bank Nifty currently is actually taking support and has taken support multiple times at this rising trend line. That started in March. Even now, it's taking support at that. If that gets broken, then maybe immediate test of the downside will be 56 400, where the 20-day moving average is. But all in all, if you see the constituents also consolidating, after a good run, private banks are also consolidating, except for Kotak. Not too many banks have done well in the private space as well for the last couple of sessions. SBI and some of the other PS unions also consolidating. So I think the view and the bias here also remains positive. Same story as Nifty. The lack of momentum might just keep it within a range, and that range is 56,400 on the downside, and on the upside you've got 57,600, the recent highs that the recent all-time highs that the Bank Nifty had made. You could see consolidation within this band for some more time to come. But yeah, the view remains biased. If you have a long position, keep your stop losses in place and stay long.
Okay, so that's the levels that we are seeing for the Nifty Bank. But Kush, coming to your stock picks of the day, talk to us about that as well.
Sure. Two of them. The first one is Sansera Engineering. The stocks had a very good run in the last 15 odd sessions. The golden crossover about to culminate with the 20-day moving average surpassing the 200-day moving average. It's a little soft today, but the overall medium-term trend is bullish. Hence, 1450, 1490 are your targets. 1370 on the downside remains your stop loss. Plenty of action in D-Link. It's had a good run, been fairly volatile, but on the whole, here too, the medium-term trajectory has been north. There have been good days where it's seen some accumulation. Even today, trading with a positive bias. So 600, 620 being your targets, 560 being your stop loss. This is the second call. And if I can just take a quick minute, and mention a couple of other stocks. Orion Pro. This was a stock that we discussed yesterday, and now, as usually, I've made a tradition. Mondays we discuss, pick of the week kind of weekly stocks. Orion Pro yesterday was up almost about 13% or a little more, at one point in time. The second target on this one that we gave yesterday was 1615, and the stock had hit, much higher levels. Cooled off a bit yesterday, cooling off today as well. But if someone did take a position, depending on the discussion that we had, we should continue to hold. And I believe even Somit had, an update on this, in his Heard on the Street segment. So yeah, all that ties in. Amber Enterprises also seems to be doing well. 7,500 was the first target. It's trading above that. If you do hold it, continue to hold for a 76.50, which was the second target, and now keep your trailing stop losses close to the 74.25 mark.
Right, Coach. Orion Pro was one of the stock in the Heard on the Street. There's a buzz that there could be an order win announcement. But I wanted your view when it comes to the IT sector, given the fact that there will be numbers that will be coming out this week. Any top picks in the Nifty IT index? How is Infosys and Tech Mahindra looking like on charts, specifically?
So, as far as the IT pack goes, we've seen the kind of flip-flop, the IT pack has been doing for some time. Infosys maybe, would have bucked the trend a little in the sense that, it's consolidated with a positive bias, much unlike the peers. If you see a TCS, it's had a fairly negative kind of a run. So if you have a position, not a bad idea to hold on to Infosys. I wouldn't, encourage a fresh long addition. Anyway, 1660 is a level where Infosys has resisted for the last month and a half, and the volumes are shrinking. So maybe the investors are also waiting for results to see, which way they go, and then take a directional play. As far as current positions are concerned, like I said, I wouldn't initiate a fresh one on Infosys, but if I did have one with a stop loss around the 1600 mark, I would continue to hold. If you do get a break above 1660, then yes, the higher levels of 1700, even 1735 are very much in play. Tech Mahindra had a very good run, was actually a shining light in the IT space, but even that is now started seeing gradual profit booking. 200-day moving average support near the 1615 mark, will act as an immediate support. If that's broken, you could see lower levels as well. So yeah, no fresh trades on the IT space. Just wait for the results to come out, see what kind of direction the stocks take. Anyway, we've seen a lot of flip-flop in the IT space for some time.
Right, Nifty Pharma is another index which remains in focus as one of the top losers, though it has recovered from day's lowest point. But this was triggered post Macquarie came out with the note where they have downgraded, or in fact downgraded their rating on a couple of stocks and have cut target price on most of them. For Dr. Reddy, they have downgraded the rating to neutral from outperform and have cut the target price to 1,190 from 1,450. For Aurobindo Pharma, they have downgraded the rating to underperform from an outperform and have cut the target price to 1,010 rupees from 1,700 rupees. For Zydus Life, they have maintained their outperform rating but have cut the target price to 1,110. They believe that the shifting US generics dynamic is making them cautious, and hence they have reduced their target price on most of them. They believe that the best of the US generic pricing cycle is behind, and going forward there could be more pressure coming in given the fact that there is tariff, which will also be a key overhang on the pharma stocks. In fact, on the flip side, HSBC had upgraded their rating on Divi's Lab, and that stock is holding in green, not much higher, it's just up 0.6%. Kush, coming to you on the pharma space, any topics here? Do you see this 3% fall or 3.5% fall that we are seeing currently in Aurobindo Pharma could be a good opportunity for any investor to buy the stock?
So within pharma also, we've got a lot of stocks and rather subsectors, doing their own thing. Healthcare broadly, would be perhaps a more suited, index to look at. But Aurobindo Pharma was in a rising channel, if you see, for the last about 10 odd sessions. And today, with the kind of drop that it's had, it's given up that one. It's fallen out of that channel. Now the 20-day moving average has been the low that the stock has made today. It's attempting a recovery. While yes, the medium-term trend remains intact, I would wait and watch for one more day, see if this selling has some more follow-through, because the recovery hasn't really been as substantial. As far as some of the other picks go, two names that stand out for me. One of them is Divi's Lab. The stocks had a good run. What you're seeing today is, along with the other pharma names, some profit booking. Also, the 7,000 level acting as a resistance. If you see, there'll obviously be some call congestion here. So this is one stock that you could look at accumulating or buying. And here, 68.50 will be your stop loss. On the higher side, you're looking at 7,000 and then 7070 as very near-term targets for this one. But the other standout stock in this case is Laurus Labs. Had a near vertical run, consolidation for the last two sessions with a mild negative bias, but the volumes on the way down haven't really been as high, suggesting that investors aren't really even in a mood to book profits on this one. So Laurus Labs is a standout trade in this one. Keep a stop loss near the 750 mark. On the way up, 795, 820 are the targets that you're looking at. So this one stands out for me.
Right. So we're breaking this programming a little bit and bringing you a special conversation. Actually, this is the person that we're speaking with, Mayank Bansal. He's a hedge fund options trader based out of the UAE. He's, of course, now very well known in the broader media, primarily because he's being tagged as a whistleblower who actually directed SEBI into the entire scandal that is happening at Jane Street and the kind of trades that they undertook in India. Mayank, welcome to this conversation. My name is Vishwanath Nair. I just wanted to first start off this conversation with the conversation with SEBI, right? You've claimed previously that you wrote, of course, to the top management at SEBI and you got a response from Anant Narain, who eventually went on to write that order against Jane Street. And he had invited you for a meeting. However, sources are telling us that SEBI was not actually acting on any whistleblower complaint specifically when it was looking into the Jane Street issue. But if you can tell us a little bit about how that conversation went and what exactly was SEBI looking at when they were discussing this issue with you?
So basically, I had reached out to SEBI in December, on 17th of December 2024, which is when SEBI actually, as per the report itself, they've started investigating then itself. And then I did a presentation on 6th of January. And basically the patterns that I've pointed out to SEBI are part of the interim order that SEBI has released. So also I would like to just mention that I am not a whistleblower per se, as in I'm not internal to Jane Street. Obviously I've raised this for the industry, but I'm not internal to Jane Street. And yeah, so SEBI has been, initially it was handed over to NSE and they could not find anything, I think, which is when, as the extent of manipulation was increasing all through 2024, in December, I reached out to SEBI and they picked up the issue and they started investigating. All right. Since then, I've been in touch over mail. I'm sure I know a couple of brokerages also who reached out, after my reaching out. And there might be other people also who reached out to SEBI. It might not be solitarily me alone. But yes, a lot of the things that are mentioned in the interim order are from, the things that I presented to SEBI in the PPT. which is public now.
Okay, let me get into the findings themselves. Specifically with regard to the kind of trades that they undertook over 2024. Now, I've read an interview you did with a newspaper where you talked about two kinds of trades that they were undertaking as part of their strategy. One was silent options, and then I think the other one was a volatile expiry. Could you tell us a little bit about what exactly it is that you found there?
Yeah, so options have a parameter called implied volatility, which is a measure of how cheap or expensive the options are. Now, in the two kinds of constructs, what would happen on expiry day is that IVs would either completely get crushed, which is a measure of the expensiveness or the cheapness of the option, or they would just go through the roof. I will cover each of the constructs in greater detail. By the way, these constructs have been observed by practically all market participants across the industry. So it's not as if I am the only one who's experienced it. This is a far wider acknowledged phenomena that has been hampering Indian markets over the last 2 years. So just to sort of get into each type of expiry, the first kind of expiry is a quiet expiry, wherein the manipulator sells options in bulk. This leads to the options becoming extremely cheap. The IVs go through the floor. It's like a house or a real estate which typically sells for multiple crores, selling for 1 lakh or 2 lakh. They are absolutely bizarre and nonsensical IVs which end up sort of materializing when the manipulator sells options. So as he's selling, the options become cheap, which is reflected in the cheap IVs. Now you would appreciate that in case a real estate property were to be selling at 1-2 lakh as opposed to multiple crores, you would be tempted to buy it, which is what a lot of people in the industry, in options trading and the wider industry, who are tempted to do because something so cheap ought to be bought into. But what would happen then is that now short options make money when the market stays absolutely quiet. So what the manipulator would then do is that it would keep the market in an extremely tight range so that it pockets all the premium from the options that it has sold. That was the common mechanism in the quiet expiry, wherein it would pocket all the premium and keep the market in a very narrow range. The other kind of expiry was a volatile expiry, wherein he would pick one side, either the upside or the downside. Let's say he's picked the upside. He'll buy calls in absolutely humongous quantities. He'll buy ATM calls, OTM calls, deep OTM calls, all of these calls, which would be reflected in the options becoming nonsensically expensive. Once again, imagine a bottle of water selling for 20,000 instead of 20 rupees.
Right.
Okay, and then in the last 2-3 hours, you would create a move in one side, a big move on one side, which would lead to all the options becoming in the money.
Okay.
This is a widespread phenomena which has been observed in every index on every expiry practically, on 90% expiries practically, through the last 2 years. Multiple people will validate for this. So there is no question around this happening. And what is happening is extremely bizarre. It is extremely, extremely bizarre. It's like, a currency suddenly becoming a Bitcoin. A currency you would know, like a USD INR, is extremely less volatile. It's suddenly beginning to move like a Bitcoin. So it's very apparent that these things were happening.
Okay. Mike, if I can take you through two quick questions. The first one is with regard to a lot of buzz that is going around the street. I know you've already clarified that if, you cannot call yourself a whistleblower considering that you have no relation to Jane Street. However, when they see options trader, I think there is a buzz in the market and there is some conversation about your past alliances with this group. I just wanted to get that clarified on your end.
No, there's no, I have absolutely no alliances with Jane Street whatsoever. There should be no doubt.
Okay.
And I have never in any capacity been involved or have had any interaction with Jane Street. So just to be absolutely emphatically clear.
Understood. Okay, I want to ask you one last question now. So when you're looking at the kind of responses that are coming from Jane Street, for example, this morning we reported that in a letter to their employees, Jane Street has claimed that this order is bereft of any reality of the markets, and that it seems that there is a general lack of understanding of how hedging works around the globe. I wanted to just you to respond to that.
Yeah. I'll give you my views on this. That is absolute nonsense. When you're establishing an arbitrage position, as Jane Street has claimed it is doing, you can't do a cash arbitrage position with the forwards. They're arguing for basically cash and forward arbitrage. Now, cash and forwards cannot be in a ratio of 1:8, 1:7. for an arbitrage position to hold for, it should be a 1:1 ratio so that you can lock in profits. You can't be having X position in cash and 7 to 8X position in forwards. I'm calling that arbitrage. That is by no means arbitrage. So that is, I'm sure SEBI will see through it. That is a very, it's sort of a conversation that Jane Street is releasing so that it can mislead the public, is my view on it. And I'm fairly certain that this is no form of arbitrage. Plus the market dynamics. Okay, there'll be multiple people now who will validate that the market dynamics were absolutely not fundamentally linked. They were absolutely off. They were completely corrupted. Not me. There'll be multiple people who are as senior from the options trading industry itself. So there is no question around this happening.
Understood.
Jane Street can clarify whatever it wants.
I got that, Mayank. Thank you so much, actually, for joining us on this conversation and taking us through all of your points here. It's actually been quite eye-opening. And that was Mayank Bansal. Of course, he's been one of the earliest voices in this space, warning against the kind of manipulation that he claims Jane Street has been doing over 2024. We'll take a short break and come back to India Market Close.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहाँ तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the expert.
Hello and welcome. You're watching India Market Close. I'm Harsh Saita. With me is Neeraj Shah. Let's pull up the index, the Nifty, as well as have a look at the Bank Nifty. It's flat as ever, and this has been, in fact, the case for now nearly 7 trading sessions where we've seen a prolonged sort of consolidation. The Bank Nifty showing some bit of outperformance, some zing today. That also is actually an exception to how it's played out over the last 5 to 7 days. Let's pull up the intraday chart on both the Nifty as well as the Bank Nifty. See how that has gone. Again, it's another very, very range-bound day of trade. In fact, more range-bound than yesterday. And I didn't expect to be saying that, but that's exactly what it is. Just 70-point band in which the Nifty is trading at. And let's pull out the Bank Nifty as well. Get that perspective out of the way. There you go. It's quite a tight band where the Bank Nifty is concerned, maybe, but relatively apart. If I take that initial spike out, it's again very, very range bound even on the Bank Nifty, but 0.25% higher. Let's pull up the heat map and see where the possible positive is. Kotak is of course standing out in trade. No surprise there, and so is Titan. Both of those on the back of obviously their quarterly updates. Dr. Reddy is also on the back of a note. But some consumer trend is languishing. Bajaj Auto also, if I can call it consumer type or consumer facing stocks, seeing some pressure. But outside of that, you're seeing largely that the breadth is even Steven, 1:1 nearly. Let's pull up the breadth on the NSE and that'll give us perspective on how the broader markets are doing as well. Very similar to yesterday where we've reversed somewhere in the morning. And thereafter, currently, the declines lead the advances, and it's around 3:2 in terms of the ratio. Last off, let's pull up the mid-cap and small-cap indices, and there you go, 0.5% lower on the Nifty mid-cap. We've seen a bit of a bounce from those lows. Small-cap also, very similar texture. So there's been that underperformance for now the second consecutive day where the mid-cap and small-cap indices are concerned. Neeraj.
Yeah, if we can pull up the BSE 500 or the NSE 500 winners and losers, and you will see that there is 2 or 3 standout pockets of weakness today. One, there is Titan, which is amongst the top losers, in fact the top loser, 6%. Then the capital market plays, which might probably be impacted by volumes coming off post the Jane Street decision, are right up there. So Angel One and MCX stand out, and then a lot of pharmaceutical names stand out today. From a Jubilant Pharma Nova to a Granules to a Lupin, Aurobindo Pharma, Aarti Drugs, that list of stocks in pharma is very large. Which I was surprised when Kush Bora spoke about Laurus Labs as one of his ideas, because pharma is not particularly having a great day. But of course, he gave his rationale too, and we'll go to Kush in just a moment from now. But the other bucket on the gaining side, you're seeing some bit of strength, for example, in CEAT. So that one about 5.5% higher. KPR Mills and all of these textile names are having a really good day. So Trident is up about 3.5%. KPR Mills is up. Gokaldas Exports at a point of time was up in trade today. So that cohort of textile companies has had a decently good session, let's put it that way. Gokaldas, in fact, off the highs of the day. Well, in a moment, we'll get in Somit to talk about the key, how do I say, things to be heard from the street. But Kush, thanks for staying by. And like I said, I was surprised that you mentioned Laurus, right? Because pharma as a bucket isn't quite doing well. But I buy your logic. You're seeing distribution out there. You're not seeing the stock buckling down the way the rest of the pharma pack might be. What is the view on the rest of the pharma pack? The names that I spoke about, like an Aurobindo, etc., all of them are down in trade today. How do you view that bucket?
So, hi Neeraj, first up, a good afternoon, very good afternoon to you and to the viewers. My original ideas were Sansera and D-Link. Laurus Labs was in conjunction to a question that, Somit asked me as to what do I like, in this space, if at all. And Laurus still, and I maintain that, Laurus stands out because it's had a very good run. And, the last 2 sessions, including today, the profit booking, if we can call it that, is on the back of very thin volumes. So any kind of dips, in Laurus should be bought. But can't say the same for the rest of the names, that you just discussed. So, an Aurobindo, a Lupin, some of these names, they were just starting to pick up and it's starting to show some kind of steam. And then they've given away, that lead, and on the back of very high volumes, or rather relatively high volumes, at least more than the last 20 days average. So I would wait out on some of these names that testing support levels. If I talk about the Lupin in particular, 1920 was a strong support zone. It's slipped below that. So I would wait and watch. Maybe the street is sensing something for the pharma stocks in the deal. Maybe it's just some sort of moving away from safety. Could be anything. But for now, the setup in some of these names doesn't look as exciting, and it's not really a buy on dips kind of a situation. The kind of setups that you're seeing in a lot of these.
Okay, so not a buy on dip strategy, bear that in mind. Some other stocks, and Nectar Life, because of that API business sale, and that stock is down some 20%. There are a lot of weak hands today. I mean, look at the kind of moves that, for example, Kirloskar Brothers has 5.5% lower, Sharda Motors some 7.5%. So a lot of these stocks have really cracked and are continuing to be lower in the session today. So bear that in mind. On a flat day, maybe IT is bucking the trend, but otherwise it's kind of slightly iffy. Pipe companies are not doing too badly, by the way. Venus Pipes, Hariom Pipes, and something that I think 3 days back, Somit had done a small piece on why some of the pipe companies could do well in today's session too. Some of them are really packing a punch. Now, speaking of Somit, he joins in right now for our standout and standard segment at this hour, which is what is being heard on the street and what's the chatter from the dealing rooms. Somit will talk about pipes as well. But first, let's start off with what's tawa garam from the dealing rooms.
Well, it's Asian Paints and Varun Beverages to start off with. What dealers are indicating that there are buy flows on FI at desk for both these counters. In fact, Varun Beverages is something that dealers have pointed out. The stock is down in trade, but there are buy flows on FI desk at lower levels. In fact, dealers are also saying that after the 29% YTD fall that we have seen in Varun Beverages, investors now believe that a lot of positives are now being overshadowed given the fact that Africa is one of the key emerging and growth market for Varun Beverages, and India business is still, despite the competition, continues to remain steady, and this is being overshadowed, and hence we could see a bounce back that could come in for Varun Beverages. Keep an eye out for that counter. Asian Paints is also one counter that dealers have pointed out where FI flows are quite steady in trade today. When it comes to Aditya Birla Lifestyle brand, the buzz on the street is that there could be some positive corporate development that could come in anytime soon. Dealers are also indicating that a potential fundraise could also be on cards for Aditya Birla Lifestyle brands. When it comes to Aurobindo Pharma, despite the Macquarie downgrade that we have seen that has come in, a double downgrade, in fact, the stock is down 3.5%. Dealers are indicating that there are still buyers at lower levels for Aurobindo Pharma. That continues, given the fact that valuations continue to remain very cheap for Aurobindo Pharma. Apart from that, India Shelter also remains in focus. There was a big block that happened in trade. Around 50 lakh shares changed hand. Dealers are indicating that Nexus Fund was one of the seller here, and quite strong demand was seen when it comes from insurance and mutual funds. So it will be interesting to see how India Shelter, whether what names come up in the bulk and the block deal data. And lastly, it's Velar Estate, which also remains in focus. Dealers are indicating that the record date regarding the hotel demerger could be announced in the next 3 to 4 days. So keep an eye out for Velar Estate as well.
It's interesting, and certainly this is something. Velar Estate viewers, the erstwhile DB Realty. So keep that in mind. Somit, while you are with us though, because I remember you in the morning show, India Market Open, spoke about the pipe companies, right? Some of them.
Right. Yeah.
Very active today. Just kind of rewind it for us. What is the whole piece around that, and why is it that some of these stocks could be active?
So given the fact that this anti-dumping duty that Saudi Arabia had imposed on pipes that had were coming in from China and Taiwan, this could be a good export opportunity for these domestic companies like Venus Pipe, Hariom Pipe. So that opens up a big market for them, and that was the key reason why the stocks have been buzzing since then. And also given the fact that in Hariom Pipe came up with an quarterly update, where it was around 30-35% jump in volume, and sales is what they have indicated in the first quarter, which is more than what the company's guidance was of 30% growth. So that is also one of the reasons why the share prices of this company has perked up in trade, basically. Yeah.
Okay. Well, keep an eye out for some of these stocks as well. And Kush Bora, can I quickly ask you for a view on some of these pipe companies? And secondly, Kush, Velar Estate is something that Somit highlighted. How does it look on the charts for a trade?
So, Neeraj, I'm sure you'll recall, we've had this one as one of our top picks in the realty space for some time now. Right now, it's on the cusp of a breakout. So 245 is a zone where the rounding bottom formation breakout will be complete. Some of the technical parameters are suggesting that, this break is around the corner. Volumes have also been fairly healthy. So yes, I still maintain that positive view on Valor Estate. I think the swing highs that it made about a year and a half ago will very much come into play, which is at 285. So if you have a position, you should continue to hold. If not a bad idea to accumulate some more. A positional stop on this one. I'm sorry, come close to comes at 220. So with that as a stop loss, you could very well accumulate Valor Estate at current levels also. As far as pipe names go, there has been an uptick, and definitely there's a good bit of relative strength given the market situation that we are in. But if you see, they've started to come off the highs. Even a Hariom Pipes, for that matter, 494 was the high point of the day. A Venus Pipe had about 1609 as the high point of the day. So yes, the trend is intact, but this is more of a hold kind of a situation rather than a fresh addition, and not from a momentum and overheating perspective. Just from the fact that they've not been able to hold their ground at the high point of the day. So yes, if you have a position, you should continue to hold. In something like a Venus Pipe, it comes close to 1525. Your stop loss for Hariom Pipes, 455 is a good stop loss. That should act as your stop loss or your trailing stop loss. But I wouldn't suggest a fresh long addition. I would like to see how the markets play out. In fact, if I can just take a quick second, you mentioned how the small and the mid caps and some of the names in this space were actually starting to crack. There is a negative RSI set up on the small cap index, on the mid cap index. So some caution is warranted. We're already seeing some of that play out today and in the last couple of sessions. But I wouldn't rule out some further downside before you start seeing some positive turn in the small and the mid cap space.
Okay. All right. So that's with regard to how Kush is viewing markets. But electricity futures, and of course we're shifting tack. We're trying to go stock specific now. Electricity futures in focus. They've debuted on MCX, or rather they are going to debut on MCX on the 10th of July. This will usher in a new era for India's power sector risk management. My colleague Charu Singh caught up with the MD and CEO Praveena Rai on the sidelines of their launch event. She spoke exclusively about the importance of electricity derivatives and more. Listen in.
So I think for everybody, understanding the benefit of a commodity derivative is important. And this is a product which is widely used. We are all users of electricity. We understand the product very well. And it's hence easier to understand how it works and also understand what is the benefit that this can give us. Either by way of hedging, which is typically could be an SME, a large industrial house, and so on when it comes to the user side, or it could be an institution or a retail participant as an investor. So the market is fertile, the market is large, and this is a product that will need activity to create awareness, to bring various participants from the electrical ecosystem as well as the financial ecosystem into its fray. So I think there is a role for everybody, and we will all play the role to create and develop this market. Now, MCX is the Commodity Derivatives Exchange of India, and we have done our study. We've understood the need of the hour when it comes to what really is required by both participants, and we believe that the contract does the job. Grateful again to our regulators, SEBI, the financial regulator, and of course CERC as the regulator of electricity at the central level for supporting this.
All right, so that's of course MCX, that one in focus. Talk of obviously not reacting positively as you saw on your screen. But jewelry major Titan, it's reported a 20% year-on-year growth in its consumer business for the first quarter. Mahima here to tell us more with regard to that stock. That counted down 6%, Mahima.
Right, absolutely, and it's trading at its day's low point. And I think there are a couple of reasons as to why that has happened. To take a look, first of all, the jewelry business was the growth in the jewelry business was not as per what was expected. The jewelry business growth came in at 18% versus an expectation, street expectation of around 22%. So that's the first thing that the street is disappointed with now. And also, just to take a view as to how jewelry growth overall has fared in Q1 FY25 was around 9%, and Q1 FY23 was around FY24 was around that 23% mark. But of course, this time 18% jewelry growth is also mostly on the back of rising gold prices as well. Secondly, I think what has not worked is that the growth is not as good as how the peers have performed. I mean, for example, Kalyan saw growth of around 31%, Senco 24%, PN Gadgil also saw growth of 19%, but jewelry growth for Titan only stood at 18%. So these are the two major factors as to why the stock is under pressure today. Plus, the buyer growth in the jewelry business was flat. Overall, customers are preferring lightweight and lower caratage jewelry because of rising gold prices. Studded mix continues to be lower, and this could overall impact the margins as well. And Tanishq, Mia as well as Zoya brands grew around 17%, and CaratLane saw a good growth of around 38%. Now, there's the other side where some segments of Titan, though not as big as jewelry, have worked well. Watches, strong performance this quarter, grew 23%. Analog watches is something that has seen growth, and Fastrack and international brands did clock a double-digit growth. In the eye care business, the business is fairly stable, growth of around 12% seen this particular quarter. International business grew by 49% on the back of lower base as well. They added one store in UAE also. And Tanishq business in US has doubled is something that is on the positive sides. Now, quickly to wrap up with respect to what brokerages are saying about this particular performance and Q1 business update, Citi has maintained neutral with a target price of 3,800. What they're saying is that margins will be the key to sustain the kind of valuations that Titan is trading at. And JP Morgan again has maintained neutral with a target price of 3,350. They're saying that the next catalyst could be the earnings print, and margin delivery and management's growth outlook amid an early festive season will be a key thing to monitor for Titan going ahead. So this is the overall view of what's worked and what's not worked for the counter, and why, of course, it's under pressure today.
Okay, so that's with regard to Titan. Thank you so much for that perspective, Mahima. And Sudeep Bandyopadhyay joining us at this hour, IndiTrade Capital, giving us perspective on the fundamental side of things. Sudeep, welcome. How are you seeing Titan's numbers? And contextualize this for us. There is a Kalyan as well, which has delivered numbers. There's Titan as well. Is there a trend playing out that gold prices, which have gone up 30+% on a YOY basis, there's still some catch up to do where demand is concerned at that price?
Well, good afternoon, Harsha. I think, we have to analyze the Titan results more minutely.
Okay.
Yes, the smaller jewelry chains have grown at a faster clip compared to Titan, but one has to look at, is it the same store sales growth, or is it they have grown by adding new stores or adding more franchises? Now, then probably we will have a like-to-like comparison. Beyond that also, Titan, the base for Titan is significantly higher compared to the, whether it's a PN Gadgil or a Senco or even a Kalyan. So on that base, growing 18% is definitely not bad. Of course, the expectation was 20+% growth, and that has come as 18. So yes, there's a bit of a worry. I'm more worried about the, the challenges which they may have on the margin front, because the studded volumes haven't really gone up, and it's the low-priced, jewelry which is going more, which is selling more. So the margin pressure may be visible when they announce the financials later in the month. So I'll wait for that, because there is very little room for error as far as the valuation is concerned, because it's not a cheap stock. It is quoting at a significantly elevated PE multiple, and at that multiple, if the margin is not supporting, we may have a problem. But otherwise, sheerly based on these sales growth numbers on a quarter-on-quarter basis, I won't be too perturbed at this stage.
Okay, Kush, your take with regard to a Titan in particular, and any others within the jewelry space that you have observations on?
So To begin with, Titan has a support around the 3,400 mark, which is a 200-day moving average. We've seen the stock rebound, from those levels in the recent past. Could well do so. So give it one more day. I wouldn't venture a trade today, but tomorrow, if it does test 3,400 and hold above that, I think the risk-reward ratio for a fresh long trade, a fresh entry, or a re-entry, as the case may be, will become very interesting. So I will give it a day. 3,400 is the key level to watch for. As far as observation goes, I think the one on PC Jewelers. The stock has had a vertical run in the last 5 sessions. If you don't include today, the stock actually went from 12.5 thereabouts to almost 20. So a significant rise in this one was seen. Some profit booking along the way today, and the gap that was there around the 16.5 mark, that's being filled today. So this is actually more of a trading bet. If it does consolidate around these levels, then you could see a retest of 19.5 and 21 in the coming days, and 15.5 thereabouts becomes your stop loss. So highly volatile counter, but it's got momentum going for it. And today's fall also, although on the back of significantly high volumes, still shadows or rather the volumes in the last 2 to 3 sessions still overshadow the kind of volumes that we've had today. So it's had a good run on the back of good volumes. Today what we are seeing is profit booking, maybe some consolidation, and then off to 21 again.
Okay, so that's the take coming in with regard to some of the jewelry stocks, and the other set of stocks which are doing well in trade. There's the textile sector, buzz on the back of the steep tariffs imposed on textile producing companies by the US. Mahima joins us with a perspective on that, or rather still with us with a perspective on some of those textile counters. Mahima.
Right, so basically what's happening here is there's higher tariff on textile exporters that export garments or textiles to the US, that is Bangladesh, Indonesia, Vietnam. In fact, so basically what happens here is that higher tariffs on all of these countries will be a positive for Indian textile exporters. Any kind of differential will in terms of export might flow to India, and that is positive for Indian textile companies. India in fact is the 4th largest textile exporter in the world and has crossed the $34 billion mark in FY25 in terms of overall exports. Currently, the tariff rate that is there on India is 26%, which is of course the POS tariff rate. But with comparison with that to other countries which have received the tariff letters, Bangladesh at 35%, Vietnam at 20%, Indonesia at 32%. So if our tariffs come lower than all of these percentage rates, India will be a beneficiary in terms of textile exports for sure. Now, companies that could benefit from this include names like Trident, which has 39% of the revenue coming in from the US exports, Welspun Living 63%, KPR Mills 21% revenue coming in from US exports. There are counters like Alok Industry, where 45% of the revenue comes from US, and Gokuldas, where 77% of the total revenue comes from the US. So all of these counters could benefit. Some other names also include counters like Raymond, Arvind Limited, as well as Skitex Garments that do export their textiles as well as garments to the US. Also, just to conclude and give perspective to viewers with respect to where textile industry stands, despite of the entire global shift that's happening, textile industry has remained and has had a steady growth. Plus, there are a lot of tailwinds in picture. There's UK FTA that's taking place, there's US tariffs, there's China Plus One strategy that's working in the favor of the entire space, and lastly, India is aiming to grow this entire space to $100 billion by 2030. So all of these things combined together will aid that kind of spur in growth in the entire textile space, and of course it's in focus today as well.
Okay, well, most certainly in focus, and the way some of these stocks have shot up today and stayed higher. I mean, yes, Gokuldas has come off, but you look at, I mean, the top gainer market-wide, and if you consider Alok Industries a pure play textile company, then that's some like whatever 17-18% or no 10%, excuse me, even that's come off. But Gokuldas, Trident, Alok, everything has done well. Now, Sudeep, usually these stocks tend to flare up in an announcement and then go off too. There are very few like Pearl Global who've had a sustained shareholder return over the number of years, right? This announcement is good. Today we've seen a flare up. Will that stay that way?
Well, it's very difficult to say, Neeraj. First of all, we don't know what's going to be India's tariff rate. Now, this is this is being speculated or being estimated based on the fact that, let's say Bangladesh stays at 35 and we get a much lower tariff rate finally when it's announced. Same goes for Vietnam, Indonesia, and other countries which compete with India in the US market in particular on the textiles front. So we have to wait because we are still not sure that it's going to be a status quo, what's going to be US-India tariff rates. That's point number one. Point number two, there is two distinct, I would say, streams of export which go into US. One is garments. The other is home textile, which is, the bed sheets, bed covers, towels, and the rest of the stuff. Now, Wellspun is big in the second category, which is home textiles, whereas Gokuldas and the others are big in the first category, which is apparels. Now, the apparel part, the competition is intense with Bangladesh and Indonesia and so many other countries. Vietnam, whereas the home textile, the competition is more with Turkey and other countries. So it's a different set of countries. So we have to wait and watch and see the relative position vis-a-vis India once the entire thing is settled. It's a little too early to kind of get too excited. Of course, it's a good development because the misery of the competing countries is being touted as a favorite thing for us or a good thing for us. Let's see what happens to us.
Just talking about that trade deal, this is what we are learning right now, that it's now about political will and not technical negotiations. This is what we are hearing. India's offer has been finalized. Ball is in Washington's court, whether to approve deal or not. And this is what we've been consistently saying. The negotiating team is back. Our version of the deal and what is acceptable to us is on the president's desk. Now it's really up to him. India's focus remains on securing preference, increasing competitiveness in labor-intensive sectors. US unlikely to offer exemptions on key sectoral tariffs. Steel, aluminum, auto parts, mini or interim trade deal to cover only goods. Broader issues like digital trade, IP and services have been kept out of this scope. There is so much news everywhere about when the timeline of the trade deal will come. All of last evening, the buzz was that it's going to come anytime now. There'll be letters on one end, a trade deal. Yeah. Now there's more buzz that will happen tonight. I would say let's hold our horses. Let's wait for an actual decision because that's what matters to the street at the end of the day. Where do you fall between 10% and 26%?
Agree. Tamanna, if my voice was as good as yours, I would have sung Chitti Aayi Hai.
You've reversed it.
I reversed it.
For those who are wondering what's happening, go back and watch India Market Open.
I did, yeah. But
we do know you have a good voice, and people know that I don't. So.
But on a serious note, I think preempting what happens on this has been a fool's errand. So therefore, might as well wait for this to come out.
And if it's out in a day or two, we're likely going to start to see the impact this week if it's out, and therefore might as well wait if you've waited this long.
Which is why I think I like Sudeep's response when he's saying that India ka rate kya hai abhi pata nahi hai, so let's not take a call on textile companies right now. Let's wait for 2 days and then think.
But if you recall, that's what Sunny Agarwal had also said in the morning. But since then, you've had stocks go up, massively. So it's a momentum trade, I suppose. I think the other important story to note is look at a BSE, look at an Angel One, look at an MCX, look at a 361 WAM. There is something which is a problem or maybe a red flag in the capital market segment of things. And call this the Jane Street impact, call it what you will, but there seems to be some concerns over here which are now building. I actually want to pull up Nuvama also very quickly if we can. BSE, of course, the worst hit, about 6% down. Nuvama is all right, has flattened out today. And Kush, let me come to you on this bit. Do you think there are opportunities here in the capital market play? Because Jane Street or no Jane Street, directionally we're going very strong and AMCs are doing well today otherwise.
100%, 110, 20%. This is the time to buy, some of these names that, had run up so fast, so sharp, and you were waiting for a dip to come about. Mind you, that's not to say that, go out and buy today because, something like a BSE is still showing some effects of, the discussions that are coming about. But then you look at something like a CDSL, it's starting to take support. You take something like a Nuvama, it's starting to take support at key levels on the downside. So yes, I don't think the India story is over. And I've had my a fair bit of stint in the broking industry, and I know one thing for sure: whatever is bad for the client in the short term is bad for the company and the industry in the long term. Now, if this is something, that is resolved, it comes out very clearly, and all the checks and balances, as SEBI has been mentioning, are put in place, the industry generally is going to just benefit out of this. So I am not disturbed. In fact, I'm looking at this as an opportunity. I might just have to wait for a day or two just to see where where BSE settles and accumulates from those levels. But on the whole, for me, this dip is more of a buying opportunity. So yes, CDSL taking support at the 20-day moving average near the 70-25 mark is a healthy sign. Nuvama, Angel One broking industry, I wouldn't touch right now. The only reason being that generally there has been pressure and volatility, in some of those stocks. But if you look at the other names like BSE, CDSL, this is more of an opportunity to buy. You might just want to see where the levels settle and then accumulate. But on the whole, buying opportunity.
So what is your top pick then amongst those? Is it BSE? Would you look at some of the other exchanges? Would you look at a CDSL?
So the top two picks are BSE and CDSL. Okay. The only reason I'm not putting a level to BSE is because this is the third day after all the news came out, and the stock is still correcting. So you wouldn't want to catch a falling knife. So if I have to give levels to it, then 2330 is a good support zone for BSE. Give it a day, see if it holds above that level. Then you might consider a buy, because when you buy today, then for whatever reason there is another correction of 3 to 5%. You wonder you could have gotten that cheaper. So BSE, yes, once the dust settles, is a good buying opportunity. The dust already seems to be settling for a CDSL. So if you want to accumulate today, then CDSL is your stock. On the downside, keep a stop loss near the 1700, 1710 zone. Then the recent swing highs of 1825, 1900 become your target. More of positional bets. But yeah, if you were to pick today, then CDSL, give it some more time. As dust settles, BSE will become a good pick.
So CDSL and BSE in that bit, and Angel One maybe, I don't know if that's in that list as well. Sudeep, what is your take? Okay, Kush is already saying no. Okay, what is your take, Sudeep?
Well, I think, BSE, there is a reason, because these hedge fund volume used to go to BSE. And obviously with this clampdown and the order on Jane Street, and naturally everybody else will be careful, and BSE will suffer volumes as far as the FNO segment is concerned, and that's a little bit of concern for BSE. So I'll wait and watch BSE and wait and watch this entire FNO related issue to settle down, or at least stabilize before I talk about BSE. And remember, the valuation was not cheap. It was very, very rich as far as BSE is concerned. So I don't think I will venture there. CDSL definitely would be worth looking at, because entire this imbroglio, CDSL doesn't get too much impacted. There is a little bit of impact because cash market volumes also may come down to an extent, but the impact will be minimum. And this kind of correction is a good opportunity for accumulating CDSL from a long-term perspective. The exchange stock, which I have been watching for some time and I think is worth looking at, is MCX. There are a lot of interesting things happening. Maybe a lot of things is under the radar. Electricity futures are getting launched. So MCX, this correction in the overall market related stocks, MCX is a good buy from a long-term perspective.
Okay. In fact, let's hear out S. Narain, EDNC here at ICICI Prudential AMC, about his view on this whole Jane Street saga, and whether it has an impact or a larger impact as well on the markets. Hear him out.
I want your view on two things, if I can. One is the RBI action in the recent past, and two, maybe I can start with that, the recent regulation or the recent moves by the regulator on, for example, Jane Street, right? Large global investment firm, if you will, making dollops of money out of Indian options market, and then we've seen this regulation come in as well. What did you make of it? Let's start with that.
I think it's a very good step by the regulator. Actually, I think in the last few days, they have done a report which shows that retail investors lost 1 lakh crores in the last financial year. That's a lot of money in a C3 settlement market in derivative. We've been also cautioning all the investors, and SEBI has done a beautiful job in releasing all these reports and actually doing this detailed investigation. See, at heart, derivatives is a sophisticated product, and it is important that the investors who trade in the derivative segment know about the risk. Despite all the efforts of the regulator, a lot of people have been trading in it and losing money. If you look at it, the growth in the losses has been much more than the growth in the markets. And that's very worrying. And regulator has spent so much of time and energy. And if you look at the investigation report that they have carried out, they have done such a deep and detailed work on it. And it is very, very shocking, and it is very worrying that investors have lost money against it. And I think the type of investigation they had to do was very, very tough and very, very good. I hope investors also realize, who are participating in the derivatives market, that they have to be very careful. As mutual funds, we don't participate much in the weekly derivatives market because we don't write options on the index. We are not allowed to write options. And for us, weekly settlement is not something that interests us. In a very, very rare situation like a budget or an election, we may take some exposure, but otherwise we have no interest in the weekly settlement because we are long-term investors. But it is a daily derivative, weekly settlement has been participated by retail investors, and they have lost a lot of money. And I think the work done by SEBI has been fantastic in this area. But I hope investors read all the reports that SEBI has prepared and realize that they have to cut their trading volume, because it is not the job of the regulator to stop trading. It is the job of the investor to realize that they have lost money. The data shows that the investor has lost money, and the gainer has been people outside India.
Yeah, that's true. So you reckon that because there is talk of SEBI extending some bit of this scrutiny to some of the other firms as well, globally, maybe locally as well, high frequency trading, etc. You reckon this will continue, and it's actually a good practice per se for the regulator to do this?
Forget all that. I think the SEBI has done such a lot of work on this area and tried to dissuade investors from trading in this weekly option.
Which I agree.
I think that itself is enough. Why should I think there is enough data to tell you that you have to be careful.
No, agree. No, but just one last point on this. So one is that the retail investor should be careful. Options trading is not making money. Two, for a regulator to pass an order of this nature onto a global firm which is trading in Indian equities or Indian derivatives and making this money, do you think this can dampen the mood of global firms which are looking at trading into Indian markets, or not really?
I don't think so. If you look at India, I think so many foreign investors and the most storied investors have made money in the last 30 years by being investors, not by doing weekly derivative options. If you look at the amount of money they have in India, it is $800–900 billion. And they made money by investing for the long term, not by doing weekly derivative options. So I think it has no impact on all those long-term investors. I don't think the long-term FIIs are going to be affected by what happens in weekly derivative options. I think weekly derivative options is something a few investors have focused on. Most of the investors who've been there in India from 1994 till 2025 are very different type of investors. They have taken long-term bets on many companies, and they are big shareholders in most of the prominent companies in India. They are not weekly derivative exposures.
We'll play out, of course, that entire exclusive conversation for you. Rare catch there. S. Narain talking about the perils of derivative trading and, of course, what Jane Street means for the F&O segment as well as retail investors. Let's look at the bull and bear segment. This is where we take the stock of the day and we give you both sides and both aspects of it, the bull case and the bear case. Today we're talking about Kotak Mahindra Bank, definitely buzzing. Higher Q-on-Q growth versus peers, and the stock has held on to most of its gains through the day, about 3.5% up even now. What is the bull versus bear case, Harsh?
Yeah, I want to start off with the Q that you've given me. So the bull case, to start off with, the QOQ numbers were strong, 4% growth on a sequential basis in net advances, surely looking good. It's the best growth QOQ among all the large to mid-cap kind of banks. So clearly standing out in a seasonally tough quarter. That's the bull case. But the bear case, let's zoom out a little bit, right? 14% growth. They've guided for 1.5 to 2x of nominal GDP growth guidance. That they've not been able to do. Okay, maybe Q1, and we'll have to wait for the GDP numbers to come for Q1. Maybe Q1, maybe that quarter in which they've actually done it. But outside of that, we've not seen that growth really kick in. Is this the turning point? Of course, we'll have to wait and watch, but that's broadly the bear case. Let's talk about the second metric, margins. They've held up well, they've sustained, but they've come off from those higher levels of 5.5%. Now they're sub 5, but they're sustaining there. The question, of course, is that can they replicate the Q4 performance in Q1 FY26? We'll have to wait and watch for that. And we had a note today also which said this, that it's going to be crucial to see margins because we've seen a sharp cut in the repo. Can margins sustain, and what is the guidance is really the question. Most banks are penciling in margin pressure, at least for the moment. Now let's talk about credit costs, because that's the most important angle of lending. Microfinance delinquencies actually rose in Q4 FY25. That is actually my bear case, but slippages in personal loans, in the personal loan book has tapered. That's actually a bull case for me. So that's likely a positive, while microfinance delinquencies rising is a negative. Now let me talk valuations a little bit. When you're looking at the price to book, it's 2.5 times 1 year forward versus the 3.1 times a 5-year average price to book which Kotak commands. But the 12-month return is actually, or rather potential, basis the average analyst estimate on Bloomberg, is just 6%. Taking this argument forward, let's quickly look at what the Bloomberg, what the consensus analysts are estimating on Bloomberg. 27 buys, 12 holds, 5 sells, and a sharp outperformance that Kotak has already seen. Can it really sustain is the question. Back to you.
Thank you for that, Harsh. In fact, let me take that question straight to Aditya Agarwala, who now joins us on the show. He's Head of Research and Investments at Invest4Edu. Of course, Sudeep is still with us. Aditya, very good afternoon to you. Let's start with Kotak Mahindra Bank and the breakout that it's shown. Do you see this sustaining?
Good afternoon. Thanks for having the show. Oh, absolutely. In fact, as a disclosure, this is one stock which is there in our portfolio, recommended to our clients. And we are quite upbeat on the stock for this entire year. So we believe that Kotak Mahindra Bank and HDFC Bank are the two private sector large cap banks which should be in your portfolio at least for at least 1 to 2 years. And you will see a decent upside from here on. If you're still looking to add the stock in your portfolio, I think this is still the right time to add the stock in your portfolio. I'm not looking for a 1 or 2 day trading time horizon. I'm looking for at least a 2600 kind of a target here on Kotak Mahindra Bank from here on, and place a stop loss somewhere around 2001 at about 2000 on the downside. And you will still see a decent upside in the coming quarters. So my sense is Kotak Mahindra Bank is definitely a buy. If you already have it in your portfolio, continue to hold on to it. If you're looking for a fresh entry, even after this 3.5% kind of an up move, I think so one should definitely look at going fresh long on Kotak Mahindra Bank.
Okay, fresh long on Kotak Mahindra Bank. What about on the Nifty? We don't know when this trade deal will come, but if you had to build a position, what would it be, Aditya?
I would go for a long trade, Tamanna, because clearly all the negatives are getting priced into the markets. Look at the way that the Nifty has taken into it, all the negatives that were there. And if anything, my sense is post this trade talks or whatever comes out from the Trump tariff, I think market is going to head north from here. So maybe place a stop loss somewhere around 25,400 on the downside. I'm looking for a target of 25,700, which has been acting as a hurdle for some time. And once that is taken out, 26,000 would be my next target. So 25,700 and 26,000 are the two targets. And I would actually stick my neck out and take that position in Nifty, a long position with a stop loss at 25,400 on the downside.
Okay, what about Bank Nifty?
Bank Nifty, I think it's done its bit of move already. From here on, my preferred index would be a Nifty as compared to a Bank Nifty. Because for me, the upside in Bank Nifty is capped somewhere around 57,800 to about 57,900 on the upside. So for me, I see more room on Nifty as compared to the Bank Nifty from here on.
Okay. Sudeep, there is a lot of traction around and announcements around the hospitality space. A couple of initiating coverage reports today on Schloss, and then Ventive gave out a fair degree of understanding around what's happening with their business as well. But we know that Q1 will likely show very wobbly numbers, and occupancies aren't great right now in the month of July either. So is it a prudent idea to wait for some pullbacks into the hotels and hospitality sector?
Well, Neeraj, I don't see too much of pullback coming in this sector. I think there's a secular uptrend in this space. Travel and tourism has got a significant boost post-COVID. there's absolutely no denying the fact that the volume of travel, volume of requirement for hotel rooms have increased significantly. And add to that the incremental religious travel circuits which have come up. Apart from that, the small towns, short stays, and whole lot of things. So, and if you compare that with the number of hotel rooms available overall in India and some other destinations like a Dubai or a Bangkok or some of the other tourist places, we can see that there is a significant gap. So I don't see the stock prices coming down or correcting sharply. Maybe one or two instances where there is company specific news and they may correct, but otherwise no. And if you're building a long-term portfolio, it may be a good idea to pick up some of these good stocks and remain invested. Look, these are not stocks which I would recommend for a 1 month, 2 month kind of investment. You have a slightly longer time horizon, buy into these stocks, and I'm sure the return you will get will be more than proportionate to the market average return. Also on an occupancy front, I think 70+% occupancy is what the average is running, and that's a pretty good occupancy by hotel industry standards. Of course, there's scope for further improvement, and I'm sure during the festive season and travel tourism boom season, this will improve further.
Okay. In fact, Morgan Stanley has come out with a note on Schloss Bangalore, highlighting Leela's luxury play. Let me get Mahima in with more details.
Right. So, as you rightly mentioned, Morgan Stanley has initiated overweight coverage for Schloss Bangalore, which is the maker of the Leela hotels, with a target price of 549. What they're saying is that Leela is the best way to play the luxury hotel space in India, and it's one of the limited ways, in fact, to play the entire luxury segment when it comes to hospitality in India. The overweight rating basically is driven by higher for longer upcycle is what they're saying, and they're seeing strong demand in terms of luxury experiences, and that is something that makes them positive with respect to where Schloss Bangalore is concerned. What they're saying is that it also has iconic assets, and that too with low net debt position, and that makes it attractive. Plus, what they're saying is that the valuations right now at which it is sitting is also at an attractive level, and that's something that makes them initiate the coverage as well. Lastly, they're also saying that steady execution can drive re-rating, but concentration risk is something that one needs to keep a watch on, and something to keep an eye out for. So this is the overall view as to what the note says about the counter and why, and what makes Morgan Stanley bullish on Schloss Bangalore.
5% higher, and we spoke about this in the morning. I think two initiating coverage reports. Yes. One was Morgan Stanley, and one I think is JP Morgan. And Morgan Stanley is on Schloss. I think 549, and the other one is 520.
Where is it versus its issue price? That's what I have to go back to. At the end of the day, before it gets to all of those lofty claims, it's almost there. So if you were quote unquote lucky enough to get a Schloss allocation, you still be some way away from what you paid for it. But nevertheless, there is this huge buzz on it right now. Aditya, I can't ask you about Schloss because not enough data on the charts, but let's get your picks this afternoon.
There were a couple of buys, Tamanna. The first one is GMR Airport. Actually, we are discussing on this particular space. I think GMR Airport looks interesting to me on the chart setup for a target of 100 rupees. I'll be a buyer here. Place a stop loss at 86 on the downside. The second is from the paint space, Asian Paints. I think it's done its bit of correction, and now it's time to look at the stock. Good short covering rally, and maybe probably a fresh long build-up can also be seen here for a target of 2600. I'll be a buyer in Asian Paints. Place a stop loss at 2400 on the downside.
Okay. Sudeep, what about Schloss? Any views over there?
Well, from a long-term investment point of view, there's absolutely no problem. To expect too much to happen in the short term will be a little unrealistic. As I just mentioned to Neeraj's question, hotel industry I like, and definitely in the luxury hotel space, Schloss has its own niche.
Okay, Bellrise is the other one that is showing a lot of buzz. Recently listed, showing some buzz because of what brokerages are saying, has come off its the highest point of the day, but still about 9.5% up. Jefferies has initiated coverage on the auto ancillary company with a buy rating. Puneet is joining in for what Jefferies is saying.
It's an initiating coverage on a recently listed company in the auto component space, Bellrise. 135 is the target, a 20% upside from the current levels. Now, the key aspect is that they're maintaining that 12 to 18% growth in terms of revenue, and profits could continue for the company. They're largely getting 60% of the company's revenue from the two-wheeler space. So they are diversifying into four-wheelers, and that has 3x more components than the two-wheeler space. So hence, it could be a growth trajectory as well. But there are two key points that you need to know. One is that 20% of the company's revenue is coming from commodity trading, which is a very marginal business in terms of profit. So that is one, and that was a concern at the time of IPO as well. And the second aspect is that Jefferies was also the investment banker. So take it with a pinch of salt. The other aspect is that valuations are at 18 times price to earnings, are very, very favorable compared to other peers with niche businesses which are operating above 30 times price to earnings. So those are some of the key highlights, but definitely valuations are in comfort, and business diversification to four-wheelers could aid growth for Bellrise going forward.
Well, thanks, Puneet, for putting that into perspective. Now, auto ancillaries and Sudeep, it's an interesting bucket simply because a clutch of auto ancillaries, if earlier some of them used to be LED light manufacturers for the government of India and smart cities, now they are defense product manufacturers as well. So pure play auto anchs might not be as many, but Bellrise in that bucket. Jefferies is constructive. The stock has had a bit of a rally ever since it's gotten listed as well. Have you studied the model? Do you like it?
I did, Neeraj. And in fact, before IPO itself, I had recommended this from an investor point of view. I think I do like the stock. I think they're doing good job, and their brand moving into four-wheeler segment from two-wheeler, where they have a significant hold, is definitely a good development. Also, as I was being just now told, the valuation comfort is significant compared to the other peer group. So yes, I think it's a good buy at current level. Also, of course, it was a good buy. If you got an allotment of the IPO, I think it has got some way to go. It's well managed company, and I think investors will do well buying into it even now.
Well, 9.78%. This would have very limited chart history, so I'm not going to ask Aditya about this. But yes, 9.8% and counting. Really, really good show by Bellrise in the session today. Aditya, any other auto or auto anch name that looks good from a trade perspective?
Actually, a couple of stocks. In fact, I would add a Bellrise also to the list because we also like the company.
You can see the chart. Interesting. Okay.
Yes. So for a target of 120, this is one stock that we still like, and one can still look at going fresh long here. There are a couple of more stocks within this space which we like. The one is Uno Minda. I think this is one stock which also looks very interesting to me. Recently added into the FNO space as well, I guess. So this is also one stock that we like for a target of 1400 with a stop loss somewhere around 1000 rupees on the downside can be looked at. The second one that we have been recommending is Endurance Technology. This is also something which looks very interesting. After a decent bit of an up move, stock has seen some bit of a cool off, a good opportunity to go fresh long here at current levels for a target of 3200 on the upside. And if I can add a tire stock also in this list, I think so it's time for tire companies to make a comeback. And within that space, I think Apollo Tire definitely stands out for me. And I think one should really look at Apollo Tires as well for a target of at least 500 to 520 on the upside with a stop loss at 460 on the downside.
Got it. Okay. Thanks, Aditya. Now, let's also focus on the real estate pack because, if you look at the sectoral breakup today, I think real estate as a bucket has not had a bad move, 1% higher today. And amongst names, I mean, yes, Brigade and Prestige are the top names today, but Keystone for the last few days has done well, and they say that they are on track to achieve the FY26 pre-sales guidance. This is as per the director of the company, Mr. Chandresh Mehta. Listen in as he talks about the company's outlook going forward.
By and large, first quarter normally is a slow quarter, and we have grown 75% year on year. So, and quarter on quarter also, we have seen a 25% growth. So in terms of doing our numbers, we are well on our way. We have given a guidance of about 4,000 crores for this particular financial year. We have already done one fourth of it in the first quarter, and we are well on our way to surpass our guidance.
Okay, 320. So before I go to real estate and take Sudeep's view on that, Aditya, your BTST, STBT call.
So for a BTST on Cummins India, capital goods space is also looking very interesting to me. So I think at current levels, one can actually go ahead and buy for a target of 3650, place a stop loss at 3350 on the downside.
Sudeep, real estate, how best would you play it at this point, and names that you like within that space?
Well, I think I do like the companies which have got a significant commercial real estate exposure, because I think that's where the action is going to be for some time. Residential part, while I'm not saying there is no action, but the demand is plateauing somewhere. It's not falling, but I think we have reached a level where incremental demand will be difficult to generate in the near term. So focus on commercial guys who are into commercial real estate. I do like Phoenix Mills a bit. I do like some of the southern developers who have a mixed model. Of course, DLF continues to remain my favorite because of the land bank they are sitting on, and of course the comfort we have in the valuation.
Okay, Aditya, I'm wondering how you would see some of these consumption plays. Titan, especially. Titan has taken quite a bit of a knock today, but I don't know if it's if the street is overdoing the kind of numbers or updates we saw on Q1, because these are business updates overall. Do you see the positional play of a bounce back from here?
Absolutely, Tamanna. I think give it a day more because we are seeing intense selling pressure, and today the trading session backed by healthy buy on high volumes as well. So my sense is it can continue its slide somewhat tomorrow as well. Closer to about 3,400 or 3,350 is where I see stock bottoming out, and eventually it should start its up move. In fact, again, as a disclosure, this is one stock that we have recommended to our clients in this downfall to add to our existing positions, and I think 3,350 is a good support area. From there, stock should recover and can hit levels of 4,000 again on the upside. So I think this is getting little overdone and should subside soon this fall, and should resume its uptrend.
Okay, so that's the case with Titan. Sudeep, what about you? Is Titan a buy, or you'd stay away?
I would say wait for a day or two and then go ahead and buy. Because I mentioned in the beginning that I think we are comparing not the right matrices. Whereas Kalyan's sales growth percentage vis-a-vis Titan, the base is significantly higher. The number of store expansion has happened in case of Kalyan in a big way, which hasn't happened so much in Titan. So same store sales growth numbers, if we compare, it may not be looking that bad. And third and final is the gold prices went up. I'm more worried about margin, and I want to see what kind of margin Titan comes up with.
6% lower though for Titan. I wonder what some of the others, and today I think PN Gardigal was the other one in the whole Titan conversation. PN Gardigal kind of got left out, but that stock too is down about 1.26% because the growth is 19%. I think if people were anticipating Titan to do 25%, I mean this one too could have done better, but not quite. We haven't. I mean somehow retail has kind of been left out this quarter. The updates haven't necessarily been very good, and Sudeep, I mean if I classify Titan not as just a jewelry company but a retail company, it's probably a mix of both. Trent, not a good quarter. Avenue Supermart's not a good quarter. Do you bide your time with, I know you give your view on Titan 1 or 2 days and then buy, but what about the broader retail space? Go out and buy or stay on the sidelines?
Well, I think, some of the names you mentioned, whether it's a Trent or a DMart, I think I will wait. Things are not really looking great there. And the valuation is not cheap in any of these stocks. They have all corrected. But even now, I think things are not really looking great. The competition is intense, whether you look at Trent, where their Zudio was doing so beautifully until recently. Now there is intense competition, both online as well as offline. Same goes for DMart, where their online delivery model is getting there, but there are too much of competition already there. So I'll wait and watch, but I will demarcate these guys from, let's say, pure play FMCG companies. That's not really retail, but FMCG, I'm positive, Neeraj.
Sudeep, we'll let you go on that note. Thank you so much for taking the time out and being with us. Really appreciate your time. Aditya, any of these guys, the Trends and the Avenue Supermarts of the world, from a charts perspective?
Trend, I think, Neeraj, makes
short
sense
trade?
to buy. Yes, no, a long trade.
Acha,
In
long
trend.
trade, okay.
Actually, it's a good risk to reward that I think at current levels one should actually initiate a fresh long in trend, place a stop loss somewhere around 5200 or maybe 5150. And I'm looking at a target of 6,300 again, and maybe if it crosses that 7,000. I think this correction that we're getting in trend is a very good opportunity to go long on the stock if you're looking to add the stock in your portfolio. My sense is these are very good levels to add in a portfolio. I don't see any significant correction from here on. Maybe at max 5150, 5200 is what I'm looking at. But again, as I mentioned, I think trend is something which I would look at adding in my portfolio at these levels. An excellent opportunity rather.
Okay. Yeah, I just want to look at what's happening with the Voltas stock. An interesting announcement this afternoon, and I'm not sure if we've addressed it, that and it is India's #1 AC company. They've introduced ceiling fans and a whole series of ceiling fans, marking a new chapter in their commitment to delivering smart and innovative products. I mean, they are one of the leaders in this space, so I wonder why they're looking at it. Now, for some time, Voltas, Blue Star, all of them have been in pain because of early monsoon. Aditya, is this a space that you're looking at all? And of course, Voltas is going to be in focus?
Yes, Naman, I think these stocks should be in your focus. Maybe not from a trading perspective because I don't see any momentum in these stocks. But yes, I would allocate some money to these stocks, and especially Voltas for that matter. I think 1500 to about 1600 is something that I'm looking at Voltas. It's a slow and steady up move, waiting for a breakout from this consolidation that we're seeing, rounding bottom pattern. Moment it crosses above 1400, I think so stock will see levels of 1600 in the near term. So yes, definitely I'm upbeat on this space. And Voltas would definitely be one stock that I would look at adding in my portfolio, at least from a medium-term perspective.
Okay, now talking about companies that are diversifying, we talked about an AC company which is now going to sell fans, and then there's KRBL, which is one of the largest rice exporting companies, which is going to now sell oil. They have entered the competitive edible oil market, and we caught up with Ayush Gupta, the business head of the company, who talked about why they want to go into this space, which is highly competitive.
While we've evaluated the edible oil space, what we've seen is that the market largely has, over the past 2 decades, only been monopolized by one player in the health oil space. And that proposition also connotes to a very, I would say, an audience above 40 or 45 years of age. India in the last decade or so has transformed. There are a lot of young, emerging, 25 plus consumers who have disposable incomes, are much more aware, are much more health conscious. I think with that vision in mind, we figured out white space in the healthy edible oil space. And both are products which are Weight Watchers, which is the Weight Watcher Special, and the Gut Pro Oil, kind of resonate with the young India's need when it comes to health first functional foods.
That's KRBL for you. As we wrap up, Aditya, you've given your closing strategy for sure. Just one word, any pharma name, because that sector has been really taken to the cleaners. Is there a short trade on any pharma name? Lupin, Aurobindo, any other?
We've seen a pullback also from the lows, so I'm not really looking at going too negative on pharma space. Maybe I'll see how markets open tomorrow and pharmas behave, and then maybe I'll take a short trade, if at all, in the pharma space. Otherwise, on the flip side, I will actually use this as an opportunity to go down, because till sometime back, pharmas were doing good, and just a minor bit of a decline shouldn't make me go short in these stocks.
Okay, thank you so much, Aditya Agarwala, joining us, giving us all of those views. We'll let you go on that note. Have a great day. Let's pull up the Nifty 50, and we're very close to the day's high. So that's the big positive. 0.25% higher on the Nifty, and it's the Bank Nifty leading the Nifty higher. Let's pull up the intraday both on the Nifty first, thereafter the Bank Nifty, and you'll see what I'm seeing. There you go, that spike. We were in a fairly range-bound day of trade, and thereafter we've seen a bit of a spike. So that's the one quick positive, closing maybe 20 odd points from the day's high. So a good half hour or so of trade that we've seen. Let's look at the Bank Nifty now intraday, and let's see if that spike can there you go, replicated, and therefore you're seeing this one really pulling the index higher. Let's pull up the heat map as well. Let's see if the breadth has changed. It hasn't. It's largely the same in terms of market breadth, so that hasn't changed. But let's see if any of the contributors are doing anything significant, and let's pull that one up as well. Well, you have a Kotak, HDFC, ICICI Bank. Well, there's those three heavyweights pulling the index, and that kind of aiding the index. Reliance really doing nothing in trade. Titan lower, of course, was the top loser, as you did see, but that's how it's shaping up. Now let's look at sectors first off. And realty, of course, is the pick of the pack, but that's within the broader market space. Private banks are also up around 2/3%, the Fin Nifty leading and the Bank Nifty leading all of the other indices outside of realty. So some of the large caps largely dominated by finance and banking. That's what's driving the index higher. IT2 around 1/4% higher, so that's the other one that's doing well. The Nifty India Defense Index is also doing is absolutely flat, in fact. But I want to look at it intraday and see what that one has done intraday. 1% lower on the Nifty Pharma, and there you go. So really flat, but we've seen a fall from the high, nearly 1% lower, but then we've seen a bit of a spike as well right towards the end. So that's on the defense index. Now, last off, I just want to talk about a couple of losers in the sectoral index. Thereafter, look at the breadth. Pharma down 1%, consumer durables 2.5% lower, so some pain clearly visible there. FMCG otherwise doing nothing after the kind of move that it showed yesterday, and that's why I'm marking that out around 1/5% lower. The metal index also is absolutely flat, just a slight negative bias coming in on the Nifty metal index. Now I want to look at the breadth of the market, and on the NSE, there you go, it's improved as the day has gone by, especially in the last hour or so, rather, not as the day has gone by. It's improved quite well, and we've closed very close to 1:1, maybe 6:5 in favor of the declines, at least as we see it. Now let's look at the mid cap and small cap. Let's see if there's been a bit of a recovery there as well. Not really visible on the Nifty mid cap, but of course we're off the day's lows, and the Nifty small cap as well. Very similar chart structure on the Nifty small cap. The BSE 500 top gainers, top losers. Can we quickly pile that up? There you go. Those are some big names. Alok Industries, Lemon Tree doing well for itself, 6% higher, among other hotel counters. But Galaxy Surfactants and Titan sitting right up there on top, 6% lower, that one. And Angel One also down nearly 4%. So those are some names for you among the losers. Now in terms of what is it that we need to look out for tomorrow? Those are a couple of macro factors that we'll have our eye out on. And anything on the domestic front, there you go. Those are some dividend adjustments which will happen likely tomorrow. Similarly, Suzu, that one is on a fly, right? So maybe something to keep on your radar, but the stock has really been on a tear. So I'll be on the lookout for that to try and understand why that's happening. But those are some names again for you in terms of dividend adjustments, all of them rolling on your screen. But completely out of time on this edition of India Market Close. From Tamanna, Neeraj, myself, everyone who puts the show together, thanks so much for watching. But you know what? Stay tuned, because we'll give you in the next half hour a glimpse of how the day has gone and what the buzzers were. Stay tuned.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज, और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahuguna. Now let's get straight into the show. So viewers, Indian equity indices traded in a narrow range to end on a flat note with Nifty at 25,500 levels. Sensex also ended the day little changed around 83,700 levels. Most sectors ended the day in the red. Pharma, auto and media were the top laggards. Realty finance remained resilient. Titan is under pressure after a disappointing Q1 update. Now the company posted 18% revenue growth for the first quarter of FY26, falling short of the analyst expectations of 22%. Now this is a slowdown from the 23.5% growth seen in Q1 of FY24. Though it's an improvement over last year's 9%, Titan also lagged behind key competitors as Kalyan Jewellers reported 31% growth, Senco 24% and PN Gadgil 19%. So the main concerns are buyer growth being flat, customers opting for lighter, lower carat jewelry, and the share of studded jewelry continued to decline, further impacting the margins. Then brand-wise, Tanishq, Mia and Zoya grew 17%, while CaratLane stood out with a strong 38% jump. All in all, Titan's Q1 performance signals slowing momentum and rising competitive pressure in the jewelry sector. Now on to the brokerage verdict. Citi notes a declining studded mix and like-for-like growth driven by ticket size, emphasizing margins as key for valuation. So JP Morgan highlights a weaker than expected jewelry growth with early double-digit like-for-like figures trailing peers like Kalyan Jewellers. So both brokerages see festive season outlook and margins as critical for Titan stock, which dropped 4% today after a subdued Q1 update. Jefferies initiates coverage on Bellrise with a buy rating and a target of 135 rupees per share. So citing strong growth prospects and compelling valuations, the brokerage highlights Bellrise's leadership in two-wheeler metal components and sees upside from rising two-wheeler demand, premiumization trends and higher content per vehicle. So expansion into four-wheelers and exports add to the growth story. Jefferies also notes that any simplification of the group structure could unlock further value. Krishna Diagnostics secures a major win in Rajasthan after receiving a fresh letter of acceptance from the state government. So the company will provide laboratory services under the National Health Mission's free diagnostic initiative. This comes after the Rajasthan High Court ruled in favor of Krishna Diagnostics and its partner TCIL, clearing the way for the agreement to proceed as planned. So the contract will operate on a hub and spoke model, aiming to expand access to free diagnostic services across the state. Royal Orchid Hotels expands its Maharashtra footprint with the launch of Regenta Central Shivani in Solapur. Now this marks the opening of its fourth property in the state this year. So the 65-room hotel developed in partnership with Mathura Agro is strategically located in Solapur, which is an industrial and commercial hub in southwest Maharashtra. The property features Rajasthani themed rooms and modern amenities catering to both business and leisure travelers, with the largest common area in the city, a 170-cover restaurant, poolside bar, banquet hall, and sprawling lawn. The hotel is well equipped for events and gatherings. JSW Infra bags a major project worth 740 crore rupees from the Syama Prasad Mukherjee Port Authority. The infra major will upgrade Kolkata's Netaji Subhash Dock under the project. So the contract awarded on a 30-year public-private partnership covers the reconstruction of berth 8 and mechanization of berth 7 and 8, all under design, build, finance, operate and transfer model. So the project aims to significantly boost the port's container handling capacity and streamline cargo movement, with operations set to begin even during the 2-year construction phase. Naveen Fluorine launches qualified institutional placement to raise up to 750 crore rupees. The indicative issue price is set at 4,680 rupees per share. The QIP will result in a dilution of about 3.23% of the company's equity, with up to 16.03 lakh shares to be issued. The primary objective of this fundraise is to bring down the company's debt, which stood at 930 crore rupees as of end of FY25. The company plans to use the proceeds mainly for debt repayment. NLC India is ramping up its green energy ambitions, with the board approving an investment of up to 1,631 crore rupees in its wholly owned subsidiary NLC India Renewables. Now this equity infusion will be made in tranches and will fund ongoing and upcoming green energy projects pending regulatory approvals. So additionally, NLC India will borrow a $100 million term loan in Japanese yen from Sumitomo Mitsui Banking Corporation to support capital expenditure for renewable projects. Lodha reports a 10% year-on-year rise in the Q1 of FY26 pre-sales at 4,450 crore rupees, despite a 7% sequential drop. So the company remains on track to meet its FY26 pre-sales guidance of 21,000 crore rupees, bolstered by a strong launch pipeline. So Lodha added 5 new projects across Mumbai, Pune, Bengaluru with a gross development value of 22,700 crore rupees, surpassing 90% of its full-year target of 25,000 crore rupees. Collections grew 7% year-on-year to 2,880 crore rupees, with stronger performance expected in the second half of FY26. Prefix Industries bags a 250 crore rupee order from state-owned power generation company for comprehensive ash disposal and operation of fly ash systems. So the 3-year contract, valid until March 31st of 2028, includes daily handling of fly ash, pond ash, hydrobin ash, along with maintenance of ash handling systems. Now, this deal strengthens Refix's positions as India's leading organized player in ash management, serving major clients like NTPC and Adani. The stock surged over 2% today, reflecting strong investor confidence in its growing environmental services portfolio. Phoenix Mills reports a 12% year-on-year rise in Q1 of FY26 retail sales across its malls, reaching 3,416 crore rupees, though slightly below Q4's 15% growth. Now, trading occupancy dipped to 89% from 91% due to planned upgrades. Now, gross residential sales also soared to 168 crore rupees from 50 crore rupees last year, with collections up 99 crore from 60 crore rupees. Strong performances at Phoenix Palacio, Citadel and Palladium drove retail growth, while new malls continue to ramp up, reinforcing Phoenix Mills' robust portfolio expansion. JP Morgan maintains its overweight rating on Hindustan Aeronautics Limited with a target price of 6,105 rupees. So the brokerage highlights HAL's steady progress, backed by a robust order book and a strong pipeline. So it notes that clarity on future initiatives is improving, while the AMCA tender remains a key monitorable. JP Morgan sees long-term potential as India upgrades its aging fighter fleet. The stock has already gained nearly 20% in 2025, reflecting investor confidence in the defense play. Jefferies initiates a buy on Adani Power with a target of 690 rupees, citing multiple growth catalysts. The company gears up for significant capacity additions backed by a healthy balance sheet. Collaboration with BHEL and in-house project execution keeps capex on track, while payments from Bangladesh help calm past investor concerns. Jefferies believes that the company momentum looks strong. Tata Motors Q1 update reveals a dip in the JLR performance. Wholesales declined 10.7% year-on-year to 87,200 units, while retail sales fall 15.1% year-on-year to 94,400 units. The wind down of older Jaguar models and US tariff drag volumes. However, the spotlight stays on the trio Range Rover Sport and Defender, which now make up 77.2% of JLR's wholesales. M&M delivers a strong June update driven by solid production growth and rising demand across its product lineup. Electric vehicles continue to build momentum, while models like Thar and Thar Rocks lead the charge with ramped-up output. Export performance remains steady, with the 3XO model making notable strides overseas. Specialty chemical player Navin Fluorine launches a 750 crore QIP. The issue is priced at 4,680 per share, potentially diluting equity by 3% through the issuance of up to 16 lakh shares. Proceeds will primarily go towards the repaying of debt as the company looks to ease its 930 crore rupees net debt burden. Kotak Mahindra Bank's Q1 update points to double-digit year-on-year growth in both advances and deposits, so marking the strongest sequential performance amid mid to large banks. Advances rise 4% quarter-on-quarter, while deposits follow closely with 5% jump. Average CASA grows modestly, but a dip at the quarter end tempers the trend. HSBC upgrades Divi's Labs to buy, raising its target to 7,900 rupees on strong growth visibility. The brokerage sees momentum building from tirzepatide, other peptides, and contrast media, with peptides alone forecast to generate $450 million in revenue by 2030. HSBC expects a robust 23% EPS CAGR from FY25 to 28. Macquarie cuts target prices across key Indian pharma names, citing a fading US generics pricing cycle and the tapering of Revlimid benefits. Dr. Reddy's and Aurobindo face downgrades to neutral and underperform respectively, with sharp target reductions. Cipla, Zydus and Lupin retain outperform ratings but see modest target cuts. Sun Pharma stands out as Macquarie reiterates its outperform call thanks to its limited exposure to US generics and a strong specialty portfolio. Morgan Stanley initiates coverage on Sklos Bangalore with an overweight rating and a 549 rupees target. calling it a luxury play through Leela Hotels. So it sees strong demand for premium travel backed by iconic properties, low debt and attractive valuation. So the firm believes steady execution could unlock upside, though revenue concentration remains a key risk. SEBI's latest study sounds the alarm on retail F&O trading. A staggering 91% of individual traders lost money in FY25, with total net losses soaring 41% to more than 1 lakh crore rupees. The average loss per trader jumped to 1.1 lakh rupees. Despite regulatory curbs introduced in the late 2024, retail participation remains elevated, especially in the index options. So SEBI has flagged this as a structural risk, urging stronger investor safeguards as the F&O frenzy continues to burn holes in the retail pockets. The much-anticipated India-US trade deal now hinges on political will, not technical hurdles, according to the sources. So India has finalized its offer with the ball firmly in Washington's court. The proposed mini-deal focuses solely on goods, leaving out complex issues like digital trade and services. India aims to secure tariff relief for labor-intensive exports, while the US remains firm on keeping duties on steel, aluminium and auto parts. Negotiators say that the framework is ready. What's needed now is a top-level push. Antique initiates coverage on India's asset management sector with a bullish outlook, citing a 15% CAGR in AUM and resilient SIP flows. So the brokerage sees stronger re-rating potential across the AMCs, driven by digital distribution, passive AUM growth, and rising investor participation. HDFC AMC, Nippon Life, AB Sun Life, and UTI AMC will receive buy ratings with robust targets. HDFC stands out for equity dominance and SIP momentum, while Nippon leads in ETFs. UTI's SIP strength and regional reach impress, and AB Sun Life is seen rebounding via passive diversification. Adani Power has boosted its presence in Maharashtra by taking over Vidarbha Industries Power, a bankrupt coal-fired plant in Nagpur, for 4,000 crore rupees. So the 600 megawatt plant was under insolvency, but Adani's resolution plan got NCLT's approval last month and was completed on July 7th. So the company says that this marks a major step in turning around stressed assets and expanding its power generation capacity. KRBL launched a new sub-brand called India Gate Up Life, which is all set to enter the highly competitive edible oil market. So we had a conversation with Ayush Gupta, the business head of the company. He said that the market has been monopolized by a single player for a very long time in the healthy oil space. He also made the point that India has become more health conscious and the company has identified the enough white space to enter. Glen Industries, a B2B manufacturer of eco-friendly food service packaging, opens its 63 crore IPO today. So closing on July 10th with a price band of 92 to 97 rupees and a market lot of 1,200 shares, it targets a 233 crore market cap. So since 2019, Glen has served top QSR, Horeca beverage and dairy brands with products like thin wall food containers, PLA straws, paper straws and U-shaped straws. Now this IPO will fuel its mission to expand sustainable recyclable packaging solutions for a greener future. India's UPI system is about to get a smart tech boost. The NPCI is working on a new version of UPI that will work with Internet of Things devices, meaning smartwatches, connected cars, even your fridge or washing machine could soon make payments on their own. So from parking fees to metro tickets and subscription renewals, smart devices could actually handle it all instantly and automatically. Prime Minister Narendra Modi left for Brasilia last night after attending the 17th BRICS summit in Rio de Janeiro. He will hold talks with Brazilian President Lula da Silva to strengthen the strategic partnership between the two countries. So key focus areas include trade, defense, energy, space, technology, agriculture, health, and people-to-people ties. Now, ahead of the Bihar Assembly elections, Railway Minister Ashwini Vaishnav has announced the launch of 4 new Amrit Bharat trains connecting the state with major cities like Delhi and Lucknow. So the new routes include New Delhi to Patna, Darbhanga to Lucknow, Malda town to Lucknow, and Saharsa to Amritsar. So during his visit to Bihar, the minister also inaugurated several railway projects at Karpuri Gram Station in Samastipur and reviewed passenger facilities at Digha Bridge, Halt in Patna, focusing on cleanliness, lighting, and security. In a bizarre turn of events, an Indigo flight from Surat to Jaipur was delayed by over an hour. So not due to weather or technical issues, but because of a swarm of bees. Yes, so the bees had gathered on the aircraft's open luggage door just as baggage was being loaded. So initial attempts to smoke them out didn't work. So prompting airport staff to call in the fire department. A fire engine was brought in to spray water and finally clear the swarm, allowing the flight to depart an hour behind schedule. The Aircraft Accident Investigation Bureau submitted its preliminary report on the Air India flight AI-171 crash in Ahmedabad to the Ministry of Civil Aviation on July 8 of 2025. Now, the Boeing 787-8 Dreamliner en route to London crashed on June 12, minutes after takeoff, killing off over 260 people, including 241 on board. So the report, based on initial findings and black box data decoded in Delhi, may point to dual engine failure, but as per the sources. So the investigation is led by the AAIB, where the US NTSB support is probing all the angles, including sabotage. Now, the report, expected to be public by July 11, aims to provide early insights. In another railway accident, 3 students were killed in Tamil Nadu when a school bus was struck by a train while trying to cross an unmanned railway track. Meanwhile, a Class 12 student and the driver on board sustained injuries in the collision. According to the Southern Railways, the school bus carrying 4 students was crossing the tracks at railway level crossing gate number 170 when the train rammed into it. Imports from 14 countries are set to face steep blanket tariffs starting August 1, President Donald Trump revealed. The president, in a series of social media posts, shared screenshots of letters dictating new tariff rates to Japan, South Korea, Malaysia, Kazakhstan, South Africa. So goods imported to the US from Japan, South Korea, Malaysia, Kazakhstan, and Tunisia are now set to face 25% tariff. South African goods to face 30% tariffs. Bangladesh gets 35% tariffs. Cambodia and Thailand are set for 36% tariffs rates. So imports from Laos and Myanmar will face a 40% duty. All of the letters say that the blanket tariff rates are separate from additional sector-specific duties on key product categories. Some more interesting commentary in each letter. Trump warned against retaliatory measures, writing, "If for any reason you decide to raise your tariffs, then whatever the number you choose to raise them by will be added onto the tariffs that we charge." So Trump also threatened an additional 10% tariff on countries aligning with the emerging BRICS bloc, accusing them of anti-Americanism after they criticized his trade policies at a summit held in Brazil's Rio. White House press secretary said that world leaders were continually calling Trump to strike deals. Trump says that US is close to sealing a deal with India following agreements already struck with UK and China. Speaking at the White House, he emphasized that countries unwilling to negotiate will face new tariffs, with letters already sent to 14 nations. So Trump added that while some duties may be adjusted if there's a cause, the current tariffs are just a fraction of what the US could demand. So the remarks come ahead of an August 1 deadline for new levies to kick in. Well, with that, viewers, it's a wrap on Market Express, but please stay tuned to NDTV Profit as there's more lined up ahead for you all.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहाँ तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
Sectoral indices end mixed with Nifty Realty as a top sectoral gainer for the third day in a row. Nifty Pharma falls the most, ends lower for the second day in a row on the back of Trump's tariff letters to countries. Sources tell NDTV Profit the India-US trade deal now hinges on political will, not technical negotiations, adding that India's offer has been finalized, but the ball is now in Washington's court whether to approve or not. According to an internal communication viewed by NDTV Profit, Jane Street tells its employees that attempts to engage with SEBI and exchanges since February were consistently rebuffed. ICICI Prudential's S. Narain is bullish on India, tells NDTV Profit that he expects a massive boom in the Indian economy and could be a growth accelerator when the world slows down, warns that attractively priced peers are curbing India's FII flows. Sources say the SEBI is in no rush to force options traders to own shares, adding that the regulator is taking their time to study the market and will consult widely before deciding on changes. The Ahmedabad Air India crash prelim report submitted to the Aviation Ministry by AAIB. The report has been based on the initial findings. The Air India flight crashed on June 12th, shortly after takeoff, killing over 200 passengers. Hello and welcome. A very good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we will be taking you through a lot of updates on national news as well as international news and also the markets, so stay tuned. To start with, the market saw a mixed day for sectoral indices. Real estate stocks led by Brigade Enterprises and Prestige Estates powered Nifty Realty to the top, while Nifty Pharma lagged behind, posting its second consecutive loss. But for more, let me go across to my colleague Harsh for a market roundup of the day.
Well, for a predominant part of the day, the market was extremely range-bound. In fact, we didn't see much movement at all, and therefore a quarter of a percentage point of a bounce that we saw right at the fag end of the day was really met with a bit of surprise. And so we closed a 0.25% higher on an otherwise very, very dull day predominantly. That's the take with regard to the Nifty 50. But what drove that higher was the Bank Nifty, and it was the banking stocks in focus. Kotak with its quarterly update, stock up over 3%. But then there was ICICI, which also kind of pushed and contributed to some of those gains. So a couple of the heavyweights really pulling their weight with regard to where the Nifty 50 is concerned. And if we pull up the intraday on the Nifty Bank as well, very similar chart structure, but the Nifty Bank was trading in a tight band in around the 0.25% higher mark, and therefore it closed around 0.5% higher at close. So again, we saw that bounce where the Nifty Bank is concerned. So that's on the benchmarks. Now let's talk a little bit about what hasn't done well as well. There was a Titan which was languishing in trade today. There was pressure on the back of its quarterly update and numbers, and we've seen retail really swinging either way. Either the numbers have been good and stocks have reacted well, or they haven't. Within that similar same basket is textiles as well, in focus because of a possible resolution on tariffs, which could well spur textile stocks, and we saw some zing on them today. So that's the one other pocket which did well. In terms of the top gainer, we did see good traction within banking, financial services. So some of those counters or sectors did well, but the realty index was the top performer. It was 1% higher, and consumer durables was down over 2% on a flat day of trade. Consumer durables stocks really took it on the chin. So 2.5% lower on the consumer durable index. The other one was the FMCG index, because the move that we saw yesterday in FMCG was extremely strong. 1.5% higher, but today so just a mild negative bias where the FMCG index is concerned. So that was the other one in focus. But outside of that, metals, pharma, very dull day for most of the other sectoral indices. Let's talk about broader markets, and the advanced decline ratio improved a wee bit versus yesterday, but we saw the broader markets continue to remain subdued and under pressure. A recovery from the lows on both the Nifty mid cap and small cap. The texture of the chart for the day on both the mid cap and small cap index very similar, but nonetheless they underperformed the benchmark clearly for a second straight day. So that was the other thing that played out.
Right, Harsh. As we end another day of range-bound trade, Mark Matthews, head of research Asia, Julius Baer, is now bullish on the IT space, who had earlier had a gloomy outlook about it. Listen in as he explains the reason behind his affirmation on this space.
The outlook for Indian IT was very gloomy just a couple of months ago. The online betting platforms were suggesting something like 70% probability of the US entering into a recession. Now that's down to about 20%. And apart from housing data, where you've got softness in house prices, generally speaking, I think the data in the US is still favorable. We saw that with the non-farm payrolls last week, which beat expectations. So I would say that the outlook for the US looks better, and that's not yet been reflected in commentary from the IT companies, but I would expect them to start to speak more positively about their operations in the US. So generally, I think it's looking better than it did a few months ago.
And shifting focus from IT to jewelry, jewelry major Titan has delivered a strong start to the financial year, reporting a 20% year-on-year growth in its consumer business for the first quarter, despite navigating volatile gold prices. The company also expanded its footprint by adding a net of 10 new stores. For a deeper dive into what's driving these numbers and the key takeaways, let's go across to my colleague Mahima.
Right, so for Titan, I think two things that have not worked. First one being that the the jewelry growth that has come in at 18% was expected to be at around 22%. So that is one thing that the street is disappointed with. And secondly, with respect to how peers have fared, something like a Kalyan has seen a revenue growth of 31% versus that of just 18% for Titan, and that is something again that the street is not happy with. In terms of the overall consumer business growth, that was at 20%. Overall, CaratLane grew by 38%. Buyer growth was flat, so a disappointing front there. Overall, studded ratio was also lower, and plain gold grew by around mid-teens. The like-for-like growth is expected to be in early double digits. In terms of watches, good growth this quarter, around 23% and added 9 new stores, mainly led by analog watches and Fast Track. iCare saw a growth of 12%, but they closed down 30-odd stores which were not performing and added 12-odd stores, that is of Titan iCare. The emerging business, however, was a decent growth. Overall business grew by 36%. Of course, it's a very small part of the business, but fragrances grew by 56%, women's bag grew by 61%, and Taneira for the first time grew for double digits by around 15%. International business grew by 49%, and they've added one new store in UAE, and Tanishq business in US markets has doubled. So that is also a good thing. In terms of PN Gadgil, well, good growth excluding the refinery sales which shut down in October 2024. Retail segment saw growth of 19%. Revenue excluding overall refinery segment grew by around 30%. Studded ratio came at 10% of overall sales, so that is increasing for them. Same-store sales growth stood at around 8%, which is slightly disappointing. But overall, because of the new store additions plus the overall gold prices going up, the same-store sales growth was impacted. They launched 2 new stores this quarter, and in terms of non-retail, e-commerce saw growth of 126%, of course, on the back of a lower base as well. And franchisee operations grew by around 109%. So this is the overall view as to how Q1 business updates stack up for these jewelry companies.
Thank you for that. And now, all eyes are on Washington as sources indicate that a crucial trade deal between India and the United States now hinges entirely on political will rather than further technical negotiations. India has reportedly finalized its offer, putting the ball squarely in Washington's court for approval. My colleague Rishabh, who's been closely tracking the deal, is joining us with more details. Rishabh, take us through the recent update that you have on this.
Right, Malika, this is the evening before July 9th. The much-famed tariff pause deadline is upon us. That, however, has again shifted from July 1st to July 9th to August 1st. But what remains of worth talking about is, of course, the India-US trade deal that has been on the horizon for a very, very long time. What we're picking up now is the fact that it is hinging on political will. It is hinging on what the top chairs in each of these countries, in India and the US, make of the deal. The Indian negotiators, as I'm told, have put forward their best version of a deal, and the ball is now squarely in Washington's court with regards to whether they want to accept a deal or not, and whether they want to make a deal currently or not. What we know is that this will be a mini trade deal or an interim trade deal, the scope of which will be limited to goods only. So don't expect anything on services, visas, IPs, all these other things, all these sticking points, especially agriculture and dairy, have been kept aside for for later tranches. The first tranche, the first big tranche, is expected around September, October this year, and the full and final FTA maybe sometime next year. But what we know from this one is that sectoral tariffs that the US imposed on steel, on aluminium, on auto and auto components, that is also set to stay. That is something that Trump has not budged from in terms of the 14 letters that he also sent to various countries. Those letters also very clearly state that sectoral tariffs will continue, and any reciprocal tariffs or any of these additional country-specific tariffs are separate from these sectoral tariffs. So that is what we're picking up. All eyes on tonight as well. Tonight is the final night before July 9th, so we'll keep our eyes peeled on Truth Social and any other commentary coming in from the ministries in both countries.
Thanks so much for that, for giving us that update. As you rightly mentioned, that India's offer stands finalized, and all eyes now are going to be on how Washington really responds to this. But the global trade landscape is once again shifting, with US President Donald Trump setting a firm August 1st deadline for new tariffs. He confirmed that letters have been sent to 14 countries, many of them in Asia, informing them that higher import duties will kick in on August 1st unless they reach a trade deal with the United States. This includes major economies like Japan and South Korea, both facing 25% tariffs on their products. Other Asian nations targeted with new tariffs include Myanmar with 40%, Thailand with 36%, Indonesia with 32%, and Bangladesh with 35%. This is the second time President Trump has set such a deadline, having previously postponed tariffs in April for 90 days. President Trump indicated that while some tariffs might be adjusted if countries present valid reasons, these letters are more or less the final offers. He stated the US is close to making a deal with India and has already made agreements with the United Kingdom and China. Now, with Trade deal negotiations still hanging in the balance. Investor sentiment remains clouded in uncertainty. Earlier today, we caught up with Edward Yardeni, president of Yardeni Research, and Rob Subaraman, who shared their perspective on just how long this ambiguity might linger. Listen in.
I think Trump figured that the U.S. is the world's largest economy. The U.S. is the world's biggest importer. It's the biggest customer for a lot of countries, including India, and that would lead to very quick deals. But it hasn't quite worked out that way. And Peter Navarro, his trade representative, back in April 11th said, we have 90 days of postponement of Liberation Day, and we'll get 90 deals in that time frame. Well, as you pointed out, we only have 2 deals with the UK and Vietnam and 1 framework with China. So it hasn't been easy at all. Countries do have their own self-interest. They're not just kind of going to roll over and do whatever the President Trump wants them to do. And so I think he's going to have to kind of declare victory by coming up with some vague agreements that don't necessarily address all the specifics, like dairy issues with India. There are a lot of issues when it comes to trade. If you really sit down and negotiate a trade deal, it could take 2 years because there's so many details involved. There's so many domestic interests involved. It's not easy. And to assume that this could all be done in 90 days was rather naive, I think. But again, I think the president has a lot of successes so far. He doesn't need this trade war to really cause him problems with the U.S. economy.
The interesting thing for India was India didn't get a letter. And I think that's a good sign that a deal is getting close. And our sense at Nomura is India probably will get a deal which is kind of similar to the UK model. The 26% current reciprocal tariff rate may come down closer to the 10%. I think the other interesting thing with these letters is for several of these Asian countries, pretty high tariff rates, 25%, Korea, Japan. For Southeast Asia, you've got several over 30%. And I think transshipments is a big focus as well. So I think this encirclement of China and US trying to stop China evading, bypassing US tariffs through third countries is a new big focus.
And as we continue to get you the updates on India-US trade deal, let's focus on the Jane Street scandal. In its very first official response since last week's sharply critical order from SEBI, Jane Street has forcefully rejected the regulator's findings. In an internal communication to its roughly 3,000 employees, the global trading firm described SEBI's accusations as extremely inflammatory, erroneous, and fundamentally mistaken about Jane Street's trading activity in India. Here's my colleague Sajid with all the key details.
US-based investor Jane Street has decided to take on the regulator directly. In a letter to employees, it has rejected the assertions made by the market regulator in the strongest possible terms. It has told its employees that the SEBI order is based on erroneous and unsupported assertions. It also went on to say that Jane Street engaged with SEBI and exchanges since August 2024 and modified trading after meeting both their exchanges, which is NSE and BSE. Jane Street also made this available to the employees that it has made multiple requests to discuss concerns, but was consistently rebuffed by the Indian exchanges and authorities. On its part, SEBI has made it very clear that the July 3rd and 4th order, which it asked Jane Street to impound nearly 4,800 crores in an escrow account is a speaking order, and the further investigations are underway, and it doesn't want to comment at this point in time beyond what it has stated in the interim order. This entire thing is now almost heading to a legal face-off, with Jane Street expected to move the Securities Appellate Tribunal, seeking a stay or an interim relief from the Appellate Tribunal. SEBI would be requiring to make the entire investigation. It will have to complete the entire investigation, but we understand from our sources that it will take between 6 months to a year before this investigation can be completed, because the current interim order is just based on the gains which was made in 21 days from Jan 23 to March 31st, 2025. And in that sense, it will take some more time before they can arrive at the final conclusion, and the process would be a little lengthier in that sense. So it's now Jane Street versus SEBI, and SEBI is sticking to his guns, and Jane Street is trying to contest what SEBI has to say with respect to the interim order.
Right, Sajid, thank you so much for explaining that. Let's also hear S. Narain, ED and CIO at ICICI Prudential AMC, about SEBI's role in the investigation of the Jane Street scandal. Narain downplayed the broader impact, saying that the Jane Street rub-off is limited strictly to weekly derivatives traders and not long-term investors. Listen in.
For a regulator to pass an order of this nature onto a global firm which is trading in Indian equities or Indian derivatives and making this money, do you think this can dampen the mood of global firms which are looking at trading into Indian markets, or not really?
I don't think so. If you look at India, I think so many Indian foreign investors and the most storied investors have made money in the last 30 years by being investors, not by doing weekly derivative options. If you look at the amount of money they have in India, it is $800–900 billion. And they made money by investing for the long term, not by doing weekly derivative options. So I think it has no impact on all those long-term investors. I don't think the long-term FIIs are going to be affected by what happens in weekly derivative options. I think weekly derivative options is something a few investors have focused on. Most of the investors who've been there in India from 1994 till 2025 are very different type of investors. They have taken long-term bets on many companies, and they are big shareholders in most of the prominent companies in India. They are not weekly derivative exposures.
Right, and president of UAE-based hedge fund Mayank Bansal also dismissed Jane Street's disputes of SEBI's findings. Let's listen in.
When you are establishing an arbitrage position, as Jane Street has claimed it is doing, you can't do a cash arbitrage position with the forwards. They are arguing for basically cash and forward arbitrage. Now, cash and forwards cannot be in a ratio of 1:8, 1:7. For an arbitrage position to hold forward, it should be a 1:1 ratio so that you can lock in profits. You can't be having X position in cash and 7 to 8X position in forwards and calling that arbitrage. That is by no means arbitrage. So that is, I'm sure SEBI will see through it. That is a very, it's sort of a conversation that Jane Street is releasing so that it can mislead the public, is my view on it. And I'm fairly certain that this is no form of arbitrage. Plus the market dynamics. Okay, there'll be multiple people now who will validate that the market dynamics were absolutely not fundamentally linked. They were absolutely off. They were completely corrupted.
And now getting you an important voice on the Jane Street scandal, former SEBI chairperson Madhavi Puri Buch has said that it's false to claim regulatory failure in the Jane Street probe, since SEBI was actively investigating the matter. She also criticized some of the media outlets for ignoring facts and spreading a misleading narrative. Buch also said that SEBI's order speaks for itself and shows sustained regulatory action. And now the question remains, how did Jane Street trick the Indian markets and make 43,000 crore in options profit? Tune in live at 6 p.m. as we unfold the entire Jane Street saga on The Big Question, only on NDTV Profit. Moving on, S. Narain also exclaimed surprise at the growth of the Indian equity markets. Listen in to why he believes India could be a growth accelerator even when the world slows down.
I think India is possibly the only market where it's so easy to raise money for private equity. Private equity is not able to raise money in any other market. India is the only market they are able to raise money so easily, and by selling their stakes. I don't think we anticipated India will be a great market in 2020, but not to this extent that almost everything can trade at 30-40 PE. I don't think we expected, but we were always recommending asset equity, we were always recommending asset allocation. We always told people to put some money in equity. Otherwise, we didn't become one of the, we definitely expected things to be good, but not to this extent.
And unlike some media reports published this morning, NDTV Profit reports that SEBI is not considering to link options leverage with cash market positions. Our sources have confirmed that no such proposal for further regulation has been pitched to the respective committee. My colleague Charu joins in with more details on the story.
Hi, so earlier this morning, a lot of media reports were circulating saying that SEBI may consider linking option positions to cash positions using a formula. Now, as per several sources that NDTV Profit spoke to, this is not right, as a proposal like this and of this magnitude is currently not on SEBI's radar. In fact, no such proposal to reject the F&O regulations further as of this moment is there. The SEBI chairperson also, in a bite that was given yesterday to several media channels, spoke about the fact that they will be releasing a white paper and talking about the data points and looking into them, considering what needs to be done further. However, something big or something stringent or something set in stone is not present at the moment. We must also consider that SEBI did come out with a white paper last evening talking about the data points related to F&O trading, from which we come to know that in the last 1 year, while the volumes have come down a bit, if we consider the same period with a two-year period, we'll come to know that the volumes have not really gone down that much. Neither have other data points. So it remains to be seen what the regulator actually ends up doing after the October curbs and after the May rejig. But for now, this particular proposal is not on the table for SEBI.
So this particular proposal is not on the table for SEBI, is the word that Charu has confirmed to us. Thank you so much for confirming that, Charu. And the team investigating the Ahmedabad Air India plane crash, viewers, has submitted its preliminary report to the Civil Aviation Ministry as per sources. It is still not known that what conclusion the investigators from Aircraft Accident Investigation Bureau have arrived upon into the crash that resulted in the death of 270 people. Meanwhile, a parliamentary panel held discussions with senior Civil Aviation Ministry officials as well as airline and airport representatives, with several parliamentarians mentioning the Air India plane crash. And viewers, that's all the time we had on this edition of Profit 360, but do stay tuned to NDTV Profit for more news and updates.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India,
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers. Hello and welcome. You're watching KYC. I'm Harsh Saita, and we've started to pick up on larger trends as well and discuss it with specific companies. And today is one such company. Could this possibly be a larger trend all the way through FY26 and beyond is really the question that we'll be asking. We're going to talk to a microfinance company, or predominantly microfinance lending company, and we're going to talk about Saturn Credit Care. Why is that so? That is the biggest question, of course, that we'll be asking today. Is the worst over? And if so, what are the trends looking like? Q1, we may not get specific guidance, of course, fully understand that because companies will be on silent period, but we've been able to manage to at least get a perspective as well. That will also go a long way in helping us understand where this goes in terms of opportunity in the microfinance space and whether investing in it is good at this point of time, whether you're finding bargain buys or not. So that's really the first question. The second one, they have exposure in southern facing states, Karnataka being one of them, Tamil Nadu being the other, and therefore are they reducing exposure there? Is credit quality improving in certain pockets? Is growth coming back? So all of those questions around concentration, because they do have a decently large concentration in some states, and that is the other thing that we'll be picking up. The third piece is with regard to rising competition in saturated markets. Now, mind you, everyone's gotten into microfinance in a big way. I'm not saying that microfinance is saturated, but there are certain markets which already look saturated. So is the low-hanging fruit over, or are we going to continue to see growth in the next cycle like the way we saw in the last? Has that at all changed is what I'd want to understand. The fourth one is macro tailwind visible? Recovery in rural, is that visible? Because that could well drive both asset quality recoveries as well as how growth kicks in going forward. So we'll try and understand both of those. Fifth piece is goals. FY26 guidance not disclosed. Unlikely that it will get disclosed either because we are still on silent period. But what is the goal like for FY27 and beyond? Let's cut out the clutter for FY26 maybe. Look at FY27 and beyond. What is the outlook looking like? And last one, is there over leveraging still in the system? If so, how much? And what are the bureau gaps like? Outside of this, of course, rate cuts, We'll try and understand what that and how that impacts someone like a Saturn Credit Care, as well as how is growth impacting the industry as a whole. So we'll try and understand all of those macros. But let's first start off with what the company is all about. I'm not going to take too much time on this, but I'm going to try and keep it as detailed as possible at the same time. NBFC MFI is what this one is. It's basically a regulated lender in the microfinance space and has an NBFC MFI license, right? Again, not getting into the explanation of that, it lends mainly to low-income women through joint liability groups model, the JLG model. That's what it's called. And what exactly is it? I'll explain that very quickly. So what is the JLG model? Important to understand. A JLG, or a joint liability group, is a group of individuals who actually form this group to borrow money, right? So all of them will come together, borrow money, and the group guarantees each other's loans. So they know each other well, and they'll be a guarantor for the other's loans. Typically, it's individuals who may not qualify for your traditional loans, something like a secured loan, someone who already has a decent credit history. So both of those pockets of people would likely not qualify. And therefore, what will happen is you will opt for something like this, a joint liability group, where there is a lesser likelihood for lenders to be worried that they will default on their loans. Obviously, this cycle has shown otherwise, but at least that is the perception, and that reduces the risk to a certain extent that there is little doubt on. Who takes joint liability group loans? Well, it's small farmers, people who don't have, or rather there is a lack of credit history, people who need to be brought in financial inclusion. It also enhances social capital, but it's small farmers, entrepreneurs, individuals running small businesses. All of those people are essentially the group that is targeted when it comes to JLG. Now let's talk about the nature of joint liability group loans. And this will probably explain better as to what a JLG actually warrants. Each individual is responsible for the other's loan as well. So the other making the repayment, you're the guarantor for it. So that's one. Even if one member defaults, others are responsible for payment of the loan. Loans are offered without collateral, so you don't need an underlying collateral for opting for these loans. And it's typical for persons in similar businesses to make a group, and because they'll understand each other's businesses. But this also, of course, leaves you open to the risk that if that business were to be failing, then pretty much all the loans are exposed. It also, Saturn in particular, has also diversified into other lending, because this is obviously slightly more risky. So the other lending they do is to housing, MSME, and they provide software as a service, but that's relatively smaller. So we'll probably talk very little to nothing about some of these things. But housing, MSME is large, and we'll talk about that. Around 1,700 odd crore of their loans are housing, MSME. Now let's talk about scale. Geographies. They are in 29 states and union territories. They are in 529 districts. They have around nearly 1,600 branches, 33.5 lakh customers, and the concentration will also come up on your screen. The top 4 states are 56% of the loans. The next 6 are 27%, and then the remaining 19 states are just 17% of the loans. So that's how really the loan mix is structured. Now let's talk about the type of loans that they give out, and that's how the loan mix is. It's microfinance predominant, 87%. Then you have housing finance, secured MSME and retail is just about 6%. And then there's a business book, which is relatively small. But broadly, it's these three. And if you club these two, it's roughly 1,700 crore, nearly, in terms of size. And that one is the one which is growing fast. That's what they're focusing in on. Now, let's talk about metrics. This is a lender, and therefore the metrics will obviously be slightly more nuanced. For those who have watched us will know. We'll start off with the income statement, the balance sheet, the asset quality, and the key metrics for lenders. We'll break that up in that fashion. Thereafter, we'll look at shareholding, street cred, street coverage, and valuations. And we'll evaluate the company on the basis of these parameters. Let's start off. Let's talk about the income statement. In terms of growth, Well, it's been a decent 3-year CAGR. They've done around a 27.5% growth on the net interest income number. Your operating profit too has grown or ballooned 52%. So there's an OPEX play which is playing out on the numbers there with regard to where operating profit is concerned. Your provisioning has gone up, but it's also a tough cycle, and therefore this one is where all of the profit cyclicality will come from. Look at the profitability in FY24, look at the profitability in FY25, and what you'll see is that cyclicality comes in only when there is an asset quality issue or when there is expected credit loss, which actually translates to provisioning on the income statement. So that's how the income statement shapes up. We're giving this a thumbs up only from a perspective that there is definitely going to be some lumpiness in where credit costs are concerned, but your top line growth and your operating profit growth, plenty of levers to play both of those. Profitable nonetheless, and that's the only possible reason why we're giving this a thumbs up. So we'll give this a thumbs up for now. Let's look at the balance sheet now. And when you see the way in which the balance sheet has moved, we've not seen substantial growth over the last 2 years or so. From 9,000 crore odd in terms of AUM, the AUM has gone only to around 12.5 odd thousand crore. Now that's a decent growth, there's no doubt, but it's a 2-year CAGR that we're taking. So growth has come in, but would you want it to grow faster on a low base? Definitely. Also try and understand it's a bad cycle, and therefore growth has been curtailed to a certain extent. So that's the other thing at play. Now you look at FY23 and 24 and look at the growth there. Nearly 20%, right? Or rather over 20% growth, in fact nearly 30% growth there, and then thereafter you look at FY24 and FY25, there's just growth not visible. It's not even double-digit growth. So that's where some of the concerns start to crop up, that it's a highly cyclical business, but that's the nature of the business, and we'll talk a little bit about that going forward as well. You look at the capital adequacy, fairly healthy in that sense, above 25% across all 3 years. So no concerns with regard to where capital adequacy is concerned. Now let's talk about asset quality for a bit. You see how asset quality has moved over the last 3 years. This is basis the company presentation itself. So we've picked it up straight from there. There's plenty of movement with regard to your NPA ratios. There's no control over that. At least that's what it seems to suggest. We've given this a neutral only from a perspective that it's not ballooned in significant fashion. We've not seen your GNPA go above 5% or 6%. And therefore, we've given this a neutral. It's a bad cycle that it's been through for sure. Asset quality a concern for sure. So that's something that you want to keep on your radar. But that's the nature of the business. Again, that's what I'm trying to say. Microfinance by its very nature is that way. And if you're invested in it, that cyclicality is part of what you're invested in the business for. So, and that builds into valuations as well. So you want to keep in mind all of those factors when you're looking at this particular metric. Now let's talk about key metrics. And again, you'll see some bit of that cyclicality on the ROA. While the margins are fairly steady to a large extent, look at the ROA. Flat or rather near zero at FY23 levels, FY24 sharp rebound, and FY25 at 1.7%. So that's the nature of the business. When you're investing in something relating to microfinance, you'll get very good yields. So you're getting an 18.5 to around a 21% yield on your product, which you'll probably never get anywhere else. But look at the margins as well, nearly 11 to 13% on the margin count as well. So again, it's a very, very healthy margin. You won't see these kind of margins, especially in the NBFC space, in too many places. So what you want to therefore also judge is the fact that you will always have a better margin, but there will always be a credit cost built into the margin, which kind of will impact your ROA, and that the worry is the chunkiness of the credit cost that comes into the margin. It should not dilute your ROA to such an extent that it wavers so much, which is exactly what is happening. But again, to a large extent, that's the nature of the business. But you have to keep in mind that this is very, very high margin to try and build in for that credit cost. Lending is always a business where you have to take care of credit cost with the top line that you're making. and thereafter arrive at your ROA. And if you're able to do a decent ROA even in bad cycles, then that gives you leverage. So that's the way one needs to think of microfinance and lending in general as well. If there is very, very low credit cost on your lending, then of course your margins will be lower, right? And therefore it's a mix of those two, which you have to judge on the basis of. And look at the OPEX to assets as well. There's been a bit of a taper in FY24, which has aided the ROA. We've seen a bump up with regard to cost to assets as well, or rather OPEX to average AUM as well in FY25. So that's how we're looking at all the key metrics. It's a very, very neutral set of numbers that we're seeing. We've given this a neutral as well. More to wait and watch on with regard to consistency of performance. That's something I believe the markets will be looking out for. Let's look at shareholding pattern now. The promoter ownership is around 36%, around nearly 5% owned by FIs. They've sold a bit of stake in March of 25 in terms of that quarter. DIs have bought an equal amount, and the public holds the rest. It's a small company, sub 2,000 crore in market cap. So some things that you need to look out for. Now let's talk about street cred. Last 1 month returns is just 3%. 3 months is around 17%. 6 months is around 8 odd percent, and the 1 year is negative 23%. So there's clear pain there, at least over the last year or so, for those who have invested over the last year. But you look at the last 5 years, it's a doubler. We've again given this one a neutral as well, because the last 5-year performance over the longer term, it's done okay. It's been a doubler in the last 5 years. And we're at the bottom end of the cycle, almost. And we'll find that out, obviously, when we speak with management. Now, let's talk about street coverage. There's one buy, there's one hold, there is no sells, 5% upside. One is there are very few people covering the stock, or very few analysts covering the stock. Second is the upside isn't not looking too attractive. Well, unless we get better information from management, we won't be able to understand exactly what is it that is being penciled in, which doesn't offer a decent upside. And if it doesn't, then maybe we stay away. What also we have to look for is valuations. And let's pull that up. Look at the way your price to book is currently. It's trading at 0.7 times current. It's trading at 0.6 times 1 year forward. This is basis the two analysts who have made forward projections. And you look at some of the others. This is looking likely the best among all the others in terms of valuations. But you must keep in mind that it's a smaller counter, point number one. It's got less coverage, and therefore the 1 year forward valuation may well get impacted. And point number three is that you want to be cautious in a tough credit cost environment. So all of those three factors, we've been cautious about this, given this a neutral. Let's quickly pull up all the metrics that we've just spoken about and try and sum it up. So income statement, balance sheet, asset quality, key metrics, shareholding, street cred, street coverage, and valuations. And that gets us a rating of 4 out of 8 on RKYC. But let's bring on board Mr. HP Singh, Chairman and Managing Director at Saturn Credit, joining us live. Welcome, sir. It's a pleasure speaking with you. I want to first understand from you, how is the industry as a whole playing out? Is lending returning? Are you starting to see recoveries trickle through at all? Has the cycle bottomed? Is the worst over?
Oh, yeah, I think, if you look at the asset quality metrics, definitely, I think the worst is over. I think that's probably one positive statement which I would like to enumerate, When I say the worst is over, I probably say that the peak was somewhere last October, November. I think, from there on, I think the asset quality has improved, the collections have improved. And definitely, if you really look at it, the last half of a year, financial year is always very good in terms of microfinance, because the first half is very, very slow because rains, heat waves, and everything takes a toll on the disbursement and the collection. Now, having said that, I think for us, if you look at the entire landscape of the industry has not fared very well. And just to give us perspective, I think you explained it very well, and I was looking at that. The matrix, the income statement, everything which you probably brought out to be. we were probably one of the only institution which was 4 quarters in profit. If we give a complete landscape of the last 16 quarters, we've been profitable in the last 16 quarters. Now that is probably one very big positive in the entire industry. So where we probably are able to see our institution as compared to the other institutions, I think we've been able to handle asset quality, we've been able to handle our credit cost, we've been able to handle our growth. In fact, we are probably one of the only company which would have grown 7% from the last year. If you look at the entire peer group of MFI, everybody has degrown. In fact, the degrowth is far more sharper for a lot of institutions. We in that even phase have grown by about 7%. So I think if you look at the complete mixture of asset quality as well as disbursement as well as our growth, I think we've performed, I think, the best in the entire industry. And that is what I can probably say it right now.
Point taken, Mr. Singh. So things definitely improving. So I know you have stayed away from giving guidance for FY26. Can I push you for a guidance on this forum in terms of growth for FY26? And I'm not talking Q1. Let me make it very, very clear. Growth guidance for FY26. And is there a credit cost guidance I can get for FY26? What's the thought? You've said it'll shrink from 4.5%. How much?
Yeah, I can give you a guidance. We are in the silent period, but the guidance will definitely come in. But the only thing which I can say is that it's going to be positive. Okay. That's probably a reply which I would like to place it on record right now. In terms of credit, our credit cost as well as our collections efficiencies, all put together, I think we are at a place where we've actually seen the peak happen probably last year. Now it's a way how we are able to really address that, and my sense is that even the credit cost, which was about 4.6 to 4.7%, will definitely go down. That's for sure during this FY26. And that is probably two things which I can put it on the table right now. Now the guidance will come definitely. I think we said it that it'll come post the first quarter. I think it'll come at that point of time.
Sir, talk to us 3 years. What is the book size going to be maybe 2 to 3 years from now? Now that there is better visibility, at least with regard to asset quality, do you double book in 3 years? Is that a reasonable expectation?
Yeah, I think doubling a book is not what we want to really concentrate upon or look upon. For us, the biggest matrix is your asset quality. I think even if the growth is in, let's say the early teens as such, or whatever it is, I think for us, what is important is our asset quality good enough for us to generate an ROA of about 2.5 to 3%. That's what our final goal is. For us, growth will come because there is technically there's nothing which probably gives us any kind of a reason why we can't grow. We can grow, but the point is, can we grow in a fashion where our credit cost doesn't take a hit, where our GNPs don't go down, where our profitability is related to the ROA, which we really like to put. As I said, 2.5 to 3% ROA. And if I have probably, we have got I think a 6-year horizon, and this is, since we are a listed entity, you can probably see it, see the numbers of all across, 6 years on a trot, even in this cyclical, non-cyclical phases of our, we've maintained an average of about 2% ROA. And 2% ROA for a financial services company, and that to a microfinance company, where the cycles are very, very, very tough to really handle. Last 6 years, average ROA of 2%. I think that's a very huge statement, which I would like to say that, having a 6-year trot of 2% ROA, I think is fairly good for us.
So, Mr. Singh, what gives you the confidence to guide 2.5 to 3% ROA? Where's the kicker going to come from in the next 3 years?
The kicker is, again, since we were practically different from the other peer group, and when the credit cost has definitely hit, I think, double digits also for a lot of players, Over there, if we've been able to be, let's say, we are 2.5, 3 times better than, the peer group, I think, for us, when all this probably dies down, when the cyclical matrix will probably be on a stable level, I think, there for us, it's very easier in terms of our growth as well as our credit costs, as well as based on our asset quality, we'll be able to generate a 2.5% to 3% ROA. Along with that, I would also like to place on record that for us, I think, technology, we are probably one of the institutions which has got a great fallback on technology. For us, technology is like the key. It's an enabler, definitely, yes, but we follow a lot of technology. That's the reason why we opened up our subsidiary, which is a technology company, because for us, we believe that the growth or the future probably for microfinance will also lie, maybe to a large extent, how your technology also enables your acquisition of a customer, your disbursement cycles, as well as your collection efficiency. So I think that's a key matrix also to be looked at.
Mr. Singh, what is giving you the confidence that we've bottomed in terms of asset quality, or rather credit cost? The worst is over. Are you seeing a pickup with regard to rural? Are you seeing better rural income? And what is it that you're doing in terms of geographic concentration?
See, I think, and I'll give a couple of things which probably will lead to it. I think one, the disbursements have started picking up. It was not like the way it was before, because it was an election year last year. It was probably the heat waves are very massive, as well as I think if you look at the complete cyclical stuff, people have degrown, but our disbursements have picked up from there on. Even our collection efficiency are better. Now, if you look at the last quarter of the financial year 25, I think we were probably one of the best ways we could probably do it. Our PAR was completely under control. Collection efficiency of X bucket was close to about 99.8%, which is pretty good if you really look at it. Based on all these factors, and where if you look at the general environment as such, the monsoons are fine at this point of time. I think, they're talking of a normal monsoon this year. That also gives us a key insight into that the rural income, the farmer income, as well as agri and agri-allied income will also probably see an uptick. That is also one of the key reasons where kharif crops have been sown properly. I think it's probably 100%. And even the crop acreage has also increased over there. So my sense is, based on all these factors, I think, we will probably look at a much better quality and a much better disbursement growth moving ahead from here.
Mr. Singh, I have 30 seconds. A quick take. What changes in the next cycle versus the current? I have just 30 seconds, sir.
So I think, all our focus on credit quality, technology, as well as our acquisition, the way we acquire a customer based on credit bureau and the score systems which we have inherently of our own company, I think, that will give us an edge over probably a lot of people, going forward ahead.
Okay, thank you so much, Mr. Singh, for coming in, speaking with us, giving us that perspective. For me, the headline, essentially, viewers, is that the worst is over with regard to where microfinance is concerned. We're going to see a likely kicker in FY26. That's what he's hinted towards. We'll have to wait and watch as to how Q1 pans out, and thereafter will come the key commentary which markets will quickly start pricing into. So keep your eye out on this one. It's an interesting space. But thanks so much for tuning in. That's all from our side, folks. Thanks for watching.
जनता के पास सवाल ही सवाल है। जवाब ढूंढने को वो देखती है न्यूज़, और देखती है यहाँ तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है। बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Today I'd like to talk to you about old, established and very large mutual fund schemes. In the equity category, I must stipulate, the idea is, and a lot of people talk about this, the ability to be nimble for a fund manager reduces as the assets go up. And we were talking recently about Parag Parikh Flexi Cap Fund, which now has an assets under management of over 1 lakh crore. HDFC Flexi Cap is another that has a very large amount of assets under management. Nippon Small Cap Fund has now 240 odd stocks in its portfolio and is handling well over 55,000 crore rupees of assets under management. Does that make it harder to beat the benchmark and beat the peers? Are nimble players, smaller players better placed? To find out and get you the answers that you need, I'm joined today by Kshitij Mahajan, who is the Chief Executive Officer of Complete Circle. Thanks so much, Kshitij, for joining in, for taking the time. And this is an important question to ask. So what does the data point to?
So Alex, thank you. Always a pleasure to be with you on this show. I think it's an eye-opener for many of us also when we, go level 2, level 3 and do our research on the data points. And one can see that, there are some outperformance in the funds, but large cap has its own, let's say large fund has its own plus and minuses. But yes, most of the funds which have been managed proactively very well, they're able to beat the benchmark, let's say by 70 to 80% at least. So there have been instances that on 70 to 80% times they have been beating the benchmark. You talked about Parag Parikh, it is 100%, it has 100% outperformed the benchmark, and there's a catch to it because it has some foreign allocation also in the portfolio, and that has also sometimes helped. Sometimes it has dragged the portfolio return, but yes, it's such a huge fund, and think about 1 lakh crore of a single fund doing that again and again, and there's no recommendation. We're just talking as per example per se. There have been HDFC Midcap, which is the largest midcap fund with 80,000 crore corpus. It has beaten the benchmark by, or let's say most of the 80% of the time it has beaten the benchmark. So there are large funds, and if you can show on the screen, there have been ICICI Pru Large Cap, Nippon Small Cap, which have been doing this consistently over 100% times over the benchmark. So I'm saying that we have seen that not every fund, but yeah, few of those category funds which have been managed in the right spirit are doing that. But yes, as we discuss going further, there are some drawbacks, or there are some negatives also about being having a large corpus in a scheme.
Yeah, and one of them is the inability to deploy very quickly. And the necessity, Kshitij, if you agree with that, particularly in a mid-cap or a small-cap portfolio, to have a pretty large holding of large caps or to have cash. Because if there is redemption pressure, you have to meet that in liquid stocks. And that means that I mean, in a small cap fund or a mid cap fund, you have to have 65% in mid cap or small cap respectively, which allows you a portion of money. And Parag Parikh, you mentioned, at the last count, I haven't seen the latest fact sheet, but at the last count that I saw, 24,000 odd crore rupees in cash and cash equivalent instruments. And so what are we talking about? This is a scheme that has managed to beat the benchmark and beat peers because it has fallen less than the market, and you can do that when you have a significant amount of cash. Would you agree?
So there are two aspects to this. One is when they were maintaining cash, and what we have seen was 10 June and the next fact sheet will come by 10th, it's because of the market opportunity. At that time, we have seen market around 24,000 levels, and there was clear-cut opportunity when they can deploy the cash also. And then a lot of money which flows into them because they have a huge SIP book also. So now, on an average, if at that time 10-15% is being managed by most of the active funds as cash component. Now, second point is when you have the powder dry, you deploy when markets are lucrative. Second is that yes, for redemption pressure, many of these large funds, they need to maintain that type of cash, and your small and mid cap exposure in a flexi cap category also reduces. As small and mid cap, if with that huge size of fund, you deploy funds, when you're redeeming, it takes some time. If you remember, SEBI has started this exercise for small and mid cap, where they keep on checking their liquidity every 15 days, how much you can redeem in 15 days to 30 days time. So that is something which they have started. But yes, having said that, especially for specific small and mid cap fund, if they are maintaining 65% with such a huge corpus, they need to enter into large number of stocks. And further also, if you want to take exposure, they have to keep a substantial amount in cash or large cap to, yes, honor the redemption pressure.
We often speak about the flexi cap category because they have the largest scheme, but I want to focus on the others that you've shared data on, and in the mid cap space, in the small cap space, and in the multi cap space, you've picked the largest schemes, right? So in the mid cap space, we're talking about HDFC mid cap, and you've said that it beat over the last 5 years on a rolling basis, it has managed to beat the benchmark pretty much 80% of the time. What goes into that, and why have the more nimble, the smaller funds not been able to do that?
So interestingly, what has happened from 2020 September onwards, after wave one, small cap and mid cap sector was not performing after the recategorization of mutual fund. If you remember in 2018, where the recategorization happened and long-term capital gain came into play. So small and mid, and GST also came into play. A lot of things happened in 2018. So small and mid cap was not doing well. In fact, calendar year return for 2018 for small cap index was 57% negative and 48% for mid cap index. But yes, to 2020 onwards, because there was a valuation mismatch, they were trading at a lower premium, and that's how they started catching up. But I think they've been managed also very well. I should give credit to the fund manager also at the same time. And there was a lot of capital inflow which kept on happening because of the performance in this sector. And small and mid cap as a category has done really well over a period of time. But yes, there are many small size funds also which are not able to do that vis-a-vis index, where an HDFC a few others have done. So I think it goes to credit goes to a lot of fund manager also. Credit goes to a lot of stock picking ideas also, the research team also. At the same time, credit goes to managing the inflow as well as outflow part also, because they've been managing cash most of the time more than 7-8% in the portfolio. I think that is also really interesting the way the fund has been managed.
Okay. So just a quick point on this Nippon India Small Cap Fund. It's been a lot of people have tried to write them off, but unfortunately for the people that have tried, they keep outperforming. The question is, will that sustain? As you've pointed out, 240 stocks in a small cap portfolio, it's very, very large at this point. Is there a risk here?
Alice, what we'll do with 55,000 crore of small cap corpus. As per category, you have to invest 65% in those companies which are at the 251st number in an index as per the market cap. 100 is large cap, 101 to 150 is mid cap, 100, 250 and 251 and up to 500 is what you can look at the small cap or little ahead. I'm saying now what they have interestingly done is they have increased the number of stocks. To de-risk themselves, right now the allocation is between 240 stocks. And it's not they are just maintaining 65% in small cap. They are more than 70% in small cap. Samir Vartak is a great guy. The way he has managed that size of small cap I think kudos to him. We've been, so, it's a matter of chance because I work for Reliance and now it's Nippon. I keep on saying Reliance Small Cap, but yes, this Nippon Small Cap has done really well. But again, people who are watching us, they need to understand whenever they are allocating in any fund, whether small or mid cap, just don't look at the past performance of that fund. Moreover, the goal plan which you are aligning with small or mid cap, as per our discussion also, should be in excess of 10 years, because the type of performance which small and mid cap have generated in the last 3.5 years, you might see a lull of year and a half, maybe year or year and a half going further. Having said that, the SIP is the right way of doing for a long goal of 10 year plus.
Okay.
So I think they have diversified.
Point well made. So therefore, what do you need to do? Let's come to the bottom line, the pros and cons. One would argue that having an investment in a large scheme, and these are the largest out there, gives you the advantage of a very low expense ratio, because as you go up the ladder in terms of assets under management, the SEBI rules require the fund house to reduce the expense ratio. So that's a big benefit. Also, we've established that these are pretty well established, well managed funds. So should you pair, for example, in a small cap category, a large scheme like a Nippon with a smaller, more nimble scheme, as long as the portfolio duplication does not take place? What is the advice here?
Makes sense, but my suggestion here is, or like what I will like to do is that, let's say if you have a large category fund in terms of in portfolio, you can complement or pair it with, as you said, with a small category in a different basket. Like if you have a small cap which is a large category, take a mid cap which is small corpus. That's what you can do. So it has, as you said, advantage of low expense, advantage of a large fund will be from a large fund house, a better research, bigger research, advantage of better liquidity, because you will not have a liquidity crunch on your side. Let's say, as you said, 24,000 crore cash is what Parag Parikh is maintaining. Tomorrow, if there's a liquidity pressure, they can manage it well. Okay. And liquid can also give you 6.5% return. Now the return will further reduce. But I'm saying a lot of pros are there. And there are obviously cons are there, because you can't take a meaningful bet in a portfolio. If the fund size is small and a large, then if you want to buy 5% in a portfolio, then you have to take 5,000 crore in a fund like Parag Parikh. That means you can't take a substantial allocation toward a large company or a small company. So that's a negative side. And at the same time, there are other negatives also, like, in terms of managing, the cash in the portfolio. So I'm saying overall, it's a good strategy to complement your large size fund with a small size fund, but in a different category. Not necessarily take small cap only.
Got it. So closing lines then, and ultimately you want to have a well-diversified portfolio and you want to have top performers. The tendency, as you've pointed out, is to go for the top performers, and ultimately in several categories, these are the top performers. So how do you determine how to choose the schemes that you need, and how do you reshuffle? Because you could see a situation, Kshitij, and this is the last point that I'll make, where conservatism, because of a large assets under management, will lead to underperformance down the road. How do you balance that?
So largest names in the world is BlackRock with $12 trillion of assets. So that doesn't mean their funds doesn't perform. But at the same time, please understand that you need to have a balanced approach of the size of a fund also. You can't have, okay, all these large caps are doing well, large funds are doing well, and Kshitij and Alex are discussing this, I should buy this. No, we are not here to recommend you. All I'm saying is, what the performance is in the past. Look at what valuation these portfolios are trading in the future. Look at, are these portfolio, I always say, go level 2. Are these portfolios are aligned with what government policies are? Are these portfolios are aligned with what futuristic sectors are looking at? What has happened in the past is because of momentum which has played out, because a lot of cash has moved towards emerging economies in 2020. We all know that in the last 3-4 years. But going further, I think return making will not be that easy the way you have seen in the past. Getting a return of 12-13% compounding also from an equity portfolio of 4-5 diversified fund, as you said, Alex, will be a really good thing to have. So that's a right expectation. Take a couple of large size funds, complement it with a mid-size fund, and take maybe one small size fund, and looking at the fund manager pedigree. This is something which, as a combination, you should look at doing.
Fantastic. All right. And we'll get into the nitty-gritties of each of these down the road as well. Surprising facts that some of these large size funds have actually managed to beat their peers and the benchmark quite convincingly. Thanks so much, Kshitij, as always, for taking the time.
Pleasure.
Losses aren't always a bad thing. When it comes to your investments in equities, or actually even in other asset classes, you can lose money. It's not always a linear progression, particularly in the equity market. If things don't go as planned, you could lose anywhere between a couple of percentage points or even more, sometimes over 10%, 12%, 15%. In a case like COVID-19, where everything gets beaten down and you get taken off guard, you can lose up to 30% as well. But you can book those losses and you can set them off against future gains. That is called tax harvesting. I'm joined today by Arvind Rao of Arvind Rao and Associates to take you through how this process works and how you should utilize it in the best way possible and certain pitfalls to avoid. Arvind, thanks so much for taking the time as always. Now, the reason I thought that we should talk about this is we're nearing the halfway point for the calendar year, and there has been quite a bit of fluctuation in the equity markets. Of course, we've seen a bounce back, but there are several mutual fund schemes that have underperformed over the course of the last 6 months, or even equity investments, and people could be losing money. In your opinion, in which situations should you use tax harvesting?
So tax harvesting can be, it's a great tool because I think one of the biggest advantages that our tax laws afford us is that you don't have to pay tax only on your profits. You are required to pay tax on your net profits, which means whatever losses that you may have incurred, you are allowed to offset it against these profits. So this is the base where tax harvesting comes into play. So if you're holding on to some losses, and I would like to put it here that which Alex, you rightly mentioned, last 6 months, there has been both a down and an upside in the markets. So those investments where you have seen good profits and you have booked them, and at the same time you are seeing some losses in your portfolio. Ideally, you can do this even in March, but let's say you are convinced that some of the positions that you're holding, whether in terms of mutual funds or in terms of shares, if you don't see a great prospect in it, you can even cut your losses now by booking them, and you can offset these losses against the gains and thereby pay lower taxes on the gains. In fact, you can also time this to be done in such a way that you do not exceed that threshold, especially for the long-term capital gains, which is set at 1.25 lakhs per annum, on which there is no tax payable.
Okay, but not all losses are equal, and I'm not talking about quantum here, Arvind. I'm talking about the type of losses. You can have short-term capital losses, which for equity would be less than 1 year if you've held the security for less than 1 year, or you can have long-term capital losses. And it's important to understand that matrix. What can be set off against what? So can you explain that?
True. So short-term losses can be offset against short-term gains as well as long-term gains. But if you are incurring long-term losses, those can be offset only against long-term gains. So, and this is a very important point that you raised, because while you categorize as short and long, not everything will be able to offset against each other. Simple rule: short can be done against long and short, whereas long can only be done against long-term gains.
Okay, and this is true across asset classes, Arvind?
Yes,
so
across asset classes.
How would that work? Let's take a hypothetical example. For example, if I'm invested in the equity markets, I have a large position in one particular security, I've incurred a loss of say 2 lakh rupees, which is a very sizable loss. At the same time, I have decided to sell an old real estate property that I've held for 5 years, and I have just gotten a great deal. The gains that I'm making in that deal are about 15 lakhs. So how do I decide what the net is, and how does the tax work?
So while the computation of gains or losses for each of these asset class will be done independently. So for example, the shares will be done independently, the real estate will be done independently. But at the end of the day, since both of them are long-term gains, they will be housed under the head income from capital gains itself. So finally, the tax has to be paid under the same head of capital gains. So this 2 lakh losses of equity, you can offset it against the gains that you have made in real estate, and whatever remains as the positive gains in real estate, you pay the applicable tax on it, which currently is around 12.5% on the long-term gains on real estate.
Okay. Couple more questions with regard to the booking of these losses. So suppose you've booked capital losses and at the same time you've booked certain capital gains. Whenever you book capital gains, my understanding is, Arvind, that through the year, now we are in July, you would have to adhere to the schedule of advance tax payment, right? But if you have the capital loss as well, do you still have to pay advance tax?
Well, answer would be no, because the way advance tax works is you're supposed to estimate your income and the corresponding taxes on it. So when it comes to capital gains, if I have some gains and I have some booked losses, which I offset it, and I see the resulting number from that is, let's say, a loss, that means I'm not liable to pay any taxes on the same. So given that fact, and the fact that the dates on which you are doing these transactions are also locked, so you cannot be penalized for not paying advance tax on the same, because capital gains and dividends are the only two types of incomes in the securities market where you pay advance tax based on the quarter in which you are earning these gains or dividends. Because it's impossible to extrapolate how much of dividends or capital gains you'll make. So anyone who has seen their own return would have checked or would have come across the fact that whenever you report capital gains or dividends, the same also requires you to report how much of this you have earned between 15th of June up to 15th of September and so on. So as long as there is no income earned between this because of the setting off of losses or the tax harvesting, there is no liability to pay any advance tax.
You mentioned dividends. Is there a threshold for the payment of advance tax of dividends, on dividends rather, or any amount that you receive, even if it is 2,000 or 3,000 rupees, you have to pay advance tax?
Okay, so the threshold is on the amount of tax on this additional income. So I'm just taking an hypothetical example for a salaried guy whose all the TDS due on his salary would have anyways got deducted by the employer. So whatever extra income that he earns, he or she earns from their investments, whether it is dividends or interest, what has to be seen is, does the tax payable on this additional income, is it in excess of 10,000 of rupees for the whole year? If that is the case, that's where advance tax liability triggers in. So in your case, like you mentioned, if it's only 2,000 or 3,000 of dividends, the tax on it will hardly come to around maybe some 900 rupees at the highest rate. Then there is no trigger for advance tax.
Got it. Okay, so that's an important clarification. Now, circling back to the conversation about setting off of future gains, and you've established that you can either do this with short-term capital losses or long-term capital losses. How long can you pull this for? So suppose it's a COVID-like situation and you've seen your entire portfolio drop very substantially, you've booked a sizable amount of losses. How long can you extend the setting off of that?
You can go up to 8 years, Alex, from the year. So if you have booked something in, let's say, financial year 24-25, some losses, and you do not have sufficient gains to absorb those losses, you can carry it forward for the next 8 years, beginning April 25. So that's a good enough period for people to utilize these losses.
And just to clarify, though it seems pretty apparent from what you've described, you can on an ongoing basis keep using. It's like a buffer, and you keep taking from that as and when you get capital gains, and you book those capital gains, right?
Yes. And Alex, I feel like sharing a very important point here, which people sometimes think of using it to their advantage. So here's the fact that when you are carrying forward losses, in the subsequent years, when you have gains, you don't have an option to not set off these losses. Okay, so the situation I'm talking about is like someone says, I have some brought forward losses, but this year my gains are minimal. Let's say around only 1.5 lakh of long-term gains, of which 1,25,000 is anyways going to be exempt. That leaves me with only 25,000 of taxable gains. But next year, I'm anticipating that my gains are going to be much, much higher. So the question is, as a taxpayer, do I have a choice to not set off my brought forward losses against this 25 and take them away, take them forward so that I can set it off in the next year? The answer is no. By default, every year, if you make gains, these losses will get they have to be set off first.
Now, just the last part of this conversation, which is the pitfalls to avoid, and I think among them, the desire to time the transactions that you have, because ultimately a lot of times you have elements in your long-term portfolio which you would like to hold, but you want to take advantage of this provision. So for example, you're holding Tata Consultancy Services and you want to hold it in your long-term portfolio, but you're incurring short-term losses. You book that and you desire to buy it again when the price is favorable. Is that one of the pitfalls to avoid? Because you can't always get your price, and I'm guessing that you might also get a query as to why you decided to sell and buy so quickly.
True. In fact, a couple of years back when this whole concept of tax harvesting started gaining a lot of ground, people used to ask this question often, that how soon are we allowed to sell and buy? So intraday is something one should definitely avoid, because then it's counted as an intraday transaction. So you cannot sell in the morning and buy again. That would not actually amount to selling something from your portfolio and buying. It will still get counted as an intraday transaction. Generally, you can wait maybe for a couple of days or even beyond that. But for somebody like who's trying to time it and capture the best, lowest price, many a times this strategy has also failed, because if the stocks take a U-turn, like you can imagine March 25, the whole month of March 25, around the last fortnight, the prices really shot up. So people who booked the losses in the first fortnight, assuming that they'll buy it back, were taken for a surprise because the markets took a U-turn. So yeah, timing is something one has to be wary about.
Okay, so we've covered quite a bit of ground as to what you should and should not do, but any last few mistakes that you want to point out, Arvind, to avoid?
Yes, absolutely. So one has to keep in mind that although tax harvesting is very important, you should not wait for the 31st of March, because one has to be wary of the settlement cycles. Like, if 30th March happens to be a Friday, and if you're doing some loss there, you need to know when does that settlement happen. The settlement has to happen before the year end. So ideally, don't corner all your transactions in the last week of March. Second, I would say that also have a reinvestment strategy in place. Like, just don't go forward booking losses and assuming that you will be able to get the offset available. Lastly, always try to take professional help around it, because any advice is always better. Last, have proper record keeping that you keep whenever you're doing such exercises, because using the correct cost and the correct sale price is very important to capture the loss. So record keeping is very, very important.
Oh, got it. All right. Arvind, thanks so much for joining in. Always a pleasure speaking with you and useful conversation. All right, that brings us to the end of this edition of Your Money Matters. If you'd like to hear about a specific topic, then write to us in the comment section and let us know. In the meanwhile, stay tuned. Lots more coming up on NDTV Profit.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज़, और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा। मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or
Let's get in a very special voice. Mark Matthews, Head of Research Asia at Julius Baer, joins in right now with his thoughts on all that's happening around the world. And Mark, good afternoon to you. Thank you so much. It's always a pleasure talking to you, and you know that. So thank you for taking the time out. And I hope all is well. But is all well with the world at a point of time when the US and Donald Trump are giving a deadline and changing it, saying that the new deadline is also negotiable, but at the same time launching tariffs and trade deals or some trade deals which are, well, slightly different than what they'd promised?
I'm fine, thank you, by the way, and it's an honor as always to be on the program. I think now the big beautiful bill is out of the way. He's come back to the tariffs, and the stock market is almost at an all-time high, so I think he probably feels more confident doing it than when it was just 1% away from becoming a bear market back in April. Now, Reuters says that the Europeans are not going to get sent one of these infamous letters, so it seems the letters are largely being sent out here to Asia, and the two countries where it matters the most are South Korea and Japan, because they export a lot to the United States. And so we'll see how it goes with both of them. Now, even if Donald Trump forces the Japanese to open their market to American rice, I doubt Japanese consumers will buy it in stores. So I don't really think it's a big deal if Japan gives a little on that. Like India, the agricultural sector is extremely sensitive. It is in all countries in the world. But I would just say that if you look at most other countries, including India, what percent of their economies are derived from goods exported to the United States, it is not large. So it is fairly large for South Korea and Japan, but for most other countries is not. In India, I mean, it's something like, I don't know, 2% of GDP, very small. So I suspect that the tariffs are more noise than substance. And to me, the ultimate barometer of that is Walmart's share price. If the tariffs were really going to be a big deal, then I don't think Walmart's share price would be 5% below an all-time high, which is where it is today.
Very interesting take. So no one's taking this too seriously. The boy who cried wolf and the president who cried tariffs. Maybe that's what we're seeing till you have those final prices coming in. But Mark, I want to come back to that comment on India, because there's no letter, there's no deal yet though. What do you think, in your view, the outcome will be or is likely to be?
I don't know. There's talk of a mini deal and there's talk of an extension. But just to reiterate what I said earlier, I think it's mostly noise. This is not impactful for the Indian economy. And the noise could be bad because if the government does allow genetically modified corn and soybean into India and opens up the dairy market and the automobile market, for sure the opposition would take advantage of that to say that the government's been weak. And there's no doubt the Americans are very competitive in agriculture, so they could take a dent out of that market for India. So, I mean, if the Americans end up putting a 26% tariff on exports of Indian goods to the United States, I would just say it doesn't really matter because exports of goods to the United States are a very small part of India's GDP and certainly not what drives it.
Even the worst case scenario of 26% doesn't really matter. I mean, what we're learning is that those red lines on agriculture are unlikely to be crossed as far as the Indian negotiating team is concerned. Does that change at all the global view on the Indian markets? Trade deal or no trade deal?
No, I think it's irrelevant. The thing that moves the Indian market first and foremost is the earnings, which are forecast to be in the single digits for the impending results. But if we have a few outliers surprising to the upside, like in metals, I think we could even see double digit, and most certainly in the quarter beyond, we're going to move into double digit earnings because both the central bank, which was very hawkish last year, and the government, which didn't spend much, those have done a 180-degree turn. The RBI, as we know, is dovish. And I think that will translate into credit growth rising into the teens again in the next few quarters, and that'll percolate through into the economy and earnings. And the government is spending again. So with that backdrop, I don't see much to take the Indian market down unless there's a big global correction, because it is a market that is sensitive to the world market. But on its own, I think it looks very good.
Got it. Mark, in terms of what happens to foreign flows in light of the fact that there has been some dollar weakness thus far, maybe there is more in store, and opposing views there, because some people believe that a lower dollar means that quantum of flows will actually go off, versus there being a view that de-dollarization and people wanting to diversify away from the US, which has been the first port of call for nearly the last 15 years, mean that emerging markets could actually get more flows over the course of the next 12 months. How do you think about this argument?
Well, I'm torn because on the one hand, the positioning shows that there's extreme short positions in dollars. And historically, when we've reached such short positions, there has been a rise in the dollar. But on the other hand, there's a good reason for those shorts, which is the big, beautiful bill is going to require a lot more debt to finance the budget, and that will widen the deficit, which is currently at 7% of GDP. Now, historically, the US has run a deficit to GDP of about 2 to 3%, which is what most developed economies do. And so to keep it at 7%, and the Congressional Budget Office estimates it's going to go up to as high as 9% 10 years from now, would certainly mean a reduced credit rating and therefore a lower value in the dollar. So I'm kind of torn between the technicals and the fundamentals. I suppose the way I'd put it is that short term we could see a dollar rally simply because of those extreme positionings in the futures market, but longer term, the fundamentals do not bode well for the dollar.
Mark, did you have a chance, or have you looked at the recent SEBI verdict on Jane Street? And it's in some sense, it's a big one, and there have been some to and fro, so we do not know which way this will settle. But have you had a chance to look at it? What do you make of it? Any impact on trading volumes? Any other views that you may have on the development?
I would just say that this kind of thing happens once in a while, not just in India, but around the world. And because the investigation's ongoing, I don't think I can say any more.
From the Indian earnings perspective, Mark, you talked briefly about metals possibly being an outlier. How are you looking at conditions, say, for Indian IT, considering all of the uncertainty around America, pharma? Do you see this as being impacted at all?
If anything, beneficially, because the outlook for Indian IT was very gloomy just a couple of months ago. The online betting platforms were suggesting something like 70% probability of the US entering into a recession. Now that's down to about 20%. And apart from housing data, where you've got softness in house prices, generally speaking, I think the data in the US is still favorable. We saw that with the non-farm payrolls last week, which beat expectations. So I would say that the outlook for the US looks better, and that's not yet been reflected in commentary from the IT companies, but I would expect them to start to speak more positively about their operations in the US. So generally, I think it's looking better than it did a few months ago.
Okay, so that's an interesting view, because it's been very confusing on Indian IT, and here Mark Matthews comes and says it's looking better than before. What about some strong domestic plays like BFSI? If you're seeing the Indian economy grow at a steady clip, do you think that there are still pockets of growth in some of these segments?
I'm sorry, I don't have the local depth that would be required to answer the question, but I would go back to what I said earlier, that if credit growth does accelerate from around 9%, we think it's going to get to 12% around 2 or 3 quarters from now, then one obvious beneficiary of that is banks, right? So I think banks are a good domestic play.
Mark, in terms of all the developments that have happened thus far, what's your overarching stance, let's say on India, from a 3-year view, one of the fastest growing economies per se, even now, large economies at least, as so far in the trade deals or the lack of it has come out unscathed. And as you said, it is noise because the overall impact is restricted to 2% of GDP. But let's assume we kind of protect that, do more, India does more trade deals as well as FTAs with other geographies as well, and continues to grow at this 6.5%, 7%, which is the base case for most people. Does it stand to get flows over the course of the next 2 or 3 years, or do the flows remain at best unpredictable or anemic, as have been now for the last 2-3 years, wherein for a period they come in and then for a period there's just a consistent outflow?
Yes, I think it stands to get inflows. Generally speaking, the emerging market asset class has been a terrible place to invest over the last 10, 20, 30 years. Big opportunity cost in being and invested in emerging markets. One of the very few outliers is India, and so it has a proven track record of providing returns, even dollarized, to overseas investors that you can't find in Southeast Asia or Latin America or even in China or South Korea. Now, I would say, having mentioned China, that one thing that is interesting to watch is the gradual transformation in policy in China, which had been quite against the private sector there, and the big thing since 2022 has been so-called common prosperity, which means a redistribution of wealth from rich people to everybody. Of course, the market doesn't like that now. It seems that over the last year, there's multiple signs that they're moving back toward being friendlier toward the private sector. I think one reason is they recognize the technology sector in China offers so many products and services that are truly globally competitive, in some cases superior, from artificial intelligence to smartphones to semiconductors to electric vehicles. So why be mean to the companies that do those things? So anyway, I don't want to ramble, but I think you could get better news in China over the next few months, year. That would make people more disposed to investing in it again. Could take some of the shine off India, but I still think if you're talking on a 3-year view, that India is the best emerging market in the world.
Thank you so much, Mark. Always a pleasure speaking with you. We love it when you join us right here on NDTV Profit. Mark Matthews of Julius Baer there.
Dr. Edward Yardeni is with us as well. Dr. Yardeni, I was leading your overnight post and you're talking about what Peter Navarro was saying, 90 deals in 90 days, and we have only 2 thus far, but there are letters to show and yet another deadline which can be negotiated if the outcome is favorable. What's happening here?
Well, I think the big deadline is actually a domestic political one, and that is while the midterm elections seem to be far off, they were going to occur November of next year. The fact of the matter is the president really can't afford to have a trade war that causes a recession in coming months going into next year, because it would cost the Republicans the thin minorities that they have in the Senate and in the House of Representatives. So I think the market is correct in anticipating that this trade issue will be pretty much behind us by the end of the summer. Maybe we'll see what sort of things come to a head on August 1st and whether that gets delayed again. But I think the president has to get this issue behind him. And I think he'll do that by getting letters of understanding, frameworks, which is what we have with China. A lot of vague kind of 1 or 2 or 5-page documents that really won't be all that specific. And at the end of the day, I think he's going to have his 10% tariff. He needs that to raise about $400 billion to provide some cushion against the widening deficit. But other than that, I think increasingly he's going to just kind of put together all the successes he's had. He can't afford to have a loss with a recession, and he'll start doing more of these big meetings in sports arenas to gloat about his successes in order to get the Republicans to keep their majorities in Congress.
Dr. Yardeni, so point well made. All of this, as you pointed out, and we completely understand it, is playing out simultaneously in the political arena in the US as well, yes. And in the context of this big, beautiful bill that they've just signed. And so there is pressure, as you pointed out. So in your estimation, and I know that this is hard to estimate, how long do you think that this is going to take to settle down? And if it doesn't, at what point do you think global investors are going to look through it and say, hey, you know what, this is not something we pay too much attention to, go back to earnings, go back to the real data?
I think we're kind of there now. Okay. Since March, I've been arguing that this issue would be behind us by the end of the summer, and it's pretty much going according to plan, because obviously what's important here for what I do, investment strategy, is the direction of the market. And I did think that we would have a correction on all the uncertainty, but as the uncertainty dissipated, as it abated, as we've sort of learned that Trump is negotiating, that a lot of his bluster is the way he negotiates, and that at the end of the day, we may find that when all is said and done, things do settle down and the market can go back to focusing on earnings. Now, in the United States, first quarter earnings were much better than expected, and it looks like second quarter earnings will also be much better than expected, because expectations have been knocked down so much by what I call Trump tariff turmoil. Trump tariff turmoil obviously still with us, but I think the market is taking it more in stride. It's not getting as upset about it.
Mr. Yardeni, how do you see India? And earlier, Rob talked about how the fact that India has not got a letter is good. We have more time for negotiations is good. But we're also hearing that those red lines is something that India is not willing to cross. Opening up the dairy sector, the agricultural sector, that's still an issue. Yeah,
well, I think Trump figured that the U.S. is the world's largest economy. The U.S. is the world's biggest importer. It's the biggest customer for a lot of countries, including India, and that would lead to very quick deals. But it hasn't quite worked out that way. And Peter Navarro, his trade representative, back in April 11th, said, we have 90 days of postponement of Liberation Day, and we'll get 90 deals in that time frame. Well, as you pointed out, we only have 2 deals with the UK and Vietnam and 1 framework with China. So it hasn't been easy at all. Countries do have their own self-interest. They're not just going to roll over and do whatever the President Trump wants them to do. And so I think he's going to have to kind of declare victory by coming up with some vague agreements that don't necessarily address all the specifics, like dairy issues with India. There are a lot of issues when it comes to trade. If you really sit down and negotiate a trade deal, it could take 2 years because there's so many details involved. There's so many domestic interests involved. It's not easy. And to assume that this could all be done in 90 days was rather naive, I think. But again, I think the president has a lot of successes so far. He doesn't need this trade war to really cause him problems with the U.S. economy.
Rob, I'm going to come to you first. What do you make of the tariff letter spree and the promise that more letters are to come?
Well, I guess the interesting thing for India was India didn't get a letter. And I think that's a good sign that a deal is getting close. And our sense at Nomura is India probably will get a deal which is kind of similar to the UK model. The 26% current reciprocal tariff rate may come down closer to the 10%. I think the other interesting thing with these letters is for several of these Asian countries, pretty high tariff rates, 25%, Korea, Japan. For Southeast Asia, you've got several over 30%. And I think transshipments is a big focus as well. So I think this encirclement of China and US trying to stop China evading, bypassing US tariffs through third countries is a new big focus.
Rob, hi, morning. Just trying to understand where you see this settling, because ultimately these are seemingly still negotiating tactics and there's expected to be further back and forth. And of course, as much as these countries are important in the large scheme of things, we're talking about the most important in the top 5. Of course, Japan is in this list, but as you pointed out, India is not. I'm just wondering, global growth, global economic growth, what does this change, if at all, over the course of the coming months?
Well, look, I think there is a general sense that the extension to August 1st is providing wiggle room. And I think in the markets, the reaction has been fairly benign, especially Asia today. So there is a sense in the markets that this is a classic Trump-style escalate to de-escalate. And so, where we end up could be come August 1, assuming no further extension, which is certainly possible, tariff rates could be lower. Personally, I feel the risk around this is markets are getting a little bit too sanguine that there'll be a big de-escalation. I think Trump is coming off many wins of foreign policy, of the One Big Beautiful Bill Act. And in addition to that, you look at the US equity market, it's close back to near record highs. I think the risk is Trump plays a bit harder ball this time around than the market is actually expecting.
Rob, the final word on the US economy. I'm just wondering, of course, we are seeing in a few cases in the letters that got sent out a small reduction in the tariffs, but they're significantly higher than they were before. I'm just wondering about the implications, as Dr. Yardeni just pointed out, it's not reflected in earnings yet, the slowdown. It's actually better than expected in the first quarter and in the second quarter likely. And so therefore the question is, do you foresee a recession at some point towards the end of this year or heading into next year? Do you see significant slowdown in growth, and do you see inflation spiking on account of tariffs?
So out of all those, I'd say the one we're most concerned about is inflation spiking. And the interesting thing is the next US CPI report is coming out July 15. So before the new August 1 tariff deadline. And I think the risk around that report is we start to see some tariff impact showing up in US inflation. So I think right now the consensus is US core CPI will go up from 2.8 to 3%. We think by the fourth quarter, it could be around 3.25%. I think that will be very interesting, because if US inflation does start to pick up a bit, it's going to put a lot more pressure on the Trump administration to say, hey, these tariffs are having some negative effect. It'll make it harder for the Fed to cut rates if inflation goes up. And so then maybe actually the economic data, the inflation data, may actually be a key factor that actually causes Trump to ease off on the tariff rhetoric and agree to lower rates come August 1. As Dr. Yardeni said, we do have the midterms approaching. Last thing I would say, just going back to India, the interesting thing for India is if India does get a pretty decent deal here, let's say something similar to the UK where an average tariff rate is close to around 10%, that is better than most other countries in Asia that we're seeing right now. And India in the medium term could benefit a lot from trade diversion, a lot more foreign direct investment coming to India, set up factories in India, because ultimately it's got a lower tariff rate with the US, the biggest consumer in the world.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज, और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and
Good evening, you're watching The Big Question. I'm Sanjana. A global giant, 43,000 crores in profit, and India's regulator stepping in to protect the market. On Friday, SEBI cracked down on global trading firm Jane Street, accusing it of manipulating expiry day prices on Nifty and Bank Nifty options to book massive gains. SEBI calls this unlawful profit and has ordered 4,843 crore to be deposited in an escrow account. But Jane Street is hitting back. In a statement to its employees seen by NDTV Profit, the firm has strongly disputed SEBI's findings, saying its trades were entirely legitimate and part of normal arbitrage activity. It also said it's reviewing legal options and maintains confidence in its compliance framework. For Indian markets, this is a watershed moment, not because a foreign player was caught, but because the regulator acted fast, decisively, and without fear or favor. The message is clear. India welcomes global capital, but not at the cost of market integrity. So how did this trading strategy work? What does it reveal about options and expiry day volatility? And does SEBI's action raise the bar for enforcement across the world? As always, I have an expert panel this evening to decode and explain this entire saga. I have J.N. Gupta, former Executive Director, SEBI, who will break down SEBI's findings and whether the case sets a new precedent for surveillance and enforcement. Uttam Bagri, MD, BCB Brokerage, will explain how expiry day trades play out in the real market and what brokers are observing on ground. And Manishi Raichaudhary, CEO, Emma Capital Partners, will assess how global investors interpret this development and whether SEBI's firm response builds confidence or caution. Let's begin. So let's go into what exactly SEBI uncovered. J.N. Gupta, I'm going to come to you first, sir. What was Jane Street accused of and how were prices allegedly influenced to book profits?
See, my knowledge is limited to what is there in the order or what is appearing in the press. I don't have the deep dive knowledge, but the issue is very simple. Jane Street has tried to time the market, influence the market in such a manner to benefit themselves. And how did they do it? they had a position in index and they knew that what are the heavyweights in the index, and buy a contra trade in those heavyweight index things, and knowing that the slight liquidity or slight volume in the index stocks is going to change the value, the index. So that is what they did. They manipulated. I would say that based on the SEBI order, the word manipulation would be the right word. They tried to manipulate one index versus other, and with the contra position, they benefited. So that is how they did. And then very simply, the law very clearly says that there is a prevention of fraudulent and unfair trading practices, which is that any edifice that is used to profit at the cost of others is some sort of a violation of the law. And that is what SEBI has penned them now.
Uttam Bagri, if you could explain the mechanism. So what kind of expiry day trades can tilt the index even momentarily?
It's very interesting what was done and very obvious, very commonsensical when you understand it. So when you look at derivatives trading, the derivatives prices are typically determined by the cash movement, cash prices. So if you see cash when the price is 100, you'll assume the price of derivatives will be some function of that. Now, interestingly, this order comes out with some data where the number of participants in the cash market are like 5,000. The number of in the derivatives are 25,000, and number in stock future and in options are 16 lakh people. So what this strategy that seems to be have done is take a very large position in the cash segment. Because you're a rich player, you have the financial muscle. Great. There's some strength in the cash market. Take a 5x, 10x, 20x reverse position in the derivative segment in options. All right, your positions are here. Then rapidly unwind your cash segment positions. So when the cash segment prices fall, all your short positions in the derivatives, which is multiple times your cash positions, you end up making a lot of profit. It's very simple once you understand it. So buy something in cash, sell it rapidly, and take exactly multiple time position derivatives and then unwind it. You lose 5 rupees here and probably earn 500 there.
Okay. Thanks for really simplifying that. Manishi, is expiry day volatility a known risk globally? And does India's market structure, do you think, make it more vulnerable to that then?
India's market structure, to use a very, kind of layman's term, is honestly, to an outside external observer, it seems ridiculous. Almost 60%, somewhere around 60 to 70% of the global options trading happens in India. And this does not correlate at all with the structure of the options market, or rather the cash market. I would also make the point that, what Jane Street did, it obviously, it does sound like market manipulation, but there are, some arguments to suggest that it could be simple arbitrage trading. Like one of the examples that SEBI has provided, which is from the January 17th early morning trade, 9:15 to 9:22. Right at the beginning of the day, there was a massive difference between the options market implied price of the bank Nifty and the actual cash market price it was trading at. So, a trader, an arbitrager, a logical arbitrager would obviously buy the asset which is trading cheap and sell the asset which is trading expensive. Classic arbitrage strategy. Now, the problem with this is that, Jane Street did exactly that, but they did in humongous quantity in the cash market, which obviously opens them up for this allegation of pump and dump. I think there will be a lot of, evidence that would come in the future. It's gone to the appellate authorities now, and we will obviously get to know more. As of now, it seems kind of a gray area. There are possibly, arguments in favor of both sides.
I'd like to scratch a little bit more on arbitrage, and I would encourage all of my panelists, Manishi, you said, to put it in layman terms, I'd encourage you more to use it in layman terms, especially for me. You mentioned about the January 17th trade and what Jane Street did that may have perhaps looked like standard arbitrage and not manipulation. Could you explain then in practical terms how global arbitrageurs operate when there are large pricing gaps and why such trades then are considered healthy for markets internationally?
I guess the question is to me.
Yes.
You see, if, from the data that I have seen from the SEBI report, there is, there are some prices quoted there. And if you simply look at what the call option price was implying as far as the cash market price of Bank Nifty was at that time, and what the put option prices were implying, and take some kind of an average of that, a weighted average, you get an implied price of the cash market. But the actual cash market was trading far lower at that point of time. So this is the difference between the actual price and the implied price. And this is what classically the arbitrageurs between derivatives market and cash market do. And, I don't think in any market there's something illegal about it.
Okay.
But, it's in this particular case and in many other examples that SEBI has cited, there is, and in the event of doing this, there was a humongous quantum of buying in the cash market and unwinding those positions later in the day, which is, that's not usually what an arbitrager would do. So I think there is a bit of a gray area here.
All right. Okay. So let's come for a moment now and shift gears and look at Jane Street's rebuttal that came today. Jane Street says that these were legitimate arbitrage trades and that it will be exploring legal options. Jay and Gupta, sir, can arbitrage cross into manipulation, and what's the threshold then SEBI uses to determine intent?
I would say that arbitrage per se is not illegal. Arbitrage is a genuine thing. I would give a very simple example. If tomatoes are selling for 100 rupees kg in Nariman Point and 60 rupees kg in Borivali, you buy from Borivali and sell it in Nariman Point, there is no problem.
Right.
But what happens, these two things are not same class. One is the index option, other is the cash option or cash deal, something like this. Where the index option, the underlying is the cash. So there is a link between the index and the underlying. And what is happening, in order to benefit, you have done cash transaction to manipulate the cash transaction so as to impact the index and benefit yourself. So to me, it very clearly comes under the edifice used for benefiting at the cost of the market integrity. If it was a genuine movement in the cash prices, there is nothing wrong. Here there is intentional movement that I have caused in the cash market so as to impact the index. That makes it a little bit different from a normal arbitrage. See, very simple thing. All regulations are based on one fact, that the market should be a fair, transparent and perfect market. Now, when you look at the classical definition of perfect competition, there are various ingredients. Here, one of the ingredients has been misused by saying that you have tried to influence the cash market to benefit in the index market. That's all.
Got it. Uttam, then from a broker's perspective, how do you identify when large expiry day trades are part of normal hedging or arbitrage versus when they start to look like what Gupta sir is saying, a coordinated attempt to move the index?
So nobody who does a crime says that, hey, I'm guilty.
Yeah.
And every there's this reaction, and no regulator, the police guy who catches you says, hey, you are innocent.
Correct.
So there's an allegation clearly from regulator side ki, hey, I know what trading is. I have access to tons of data and behavior of tons of traders. And I know what arbitrage is. I know what put call parity is. And in fact, the SEBI order says making money is not an illegal thing. Making profits is not a bad thing. But the way you have done it is kind of weird. And it is an obvious rebuttal ki, hey, this was a part of my normal trading strategies. And making 20,000, 25,000 crores profit is just a routine thing that happens to me most of the time. Lovely to hear that. But again, as the basic funda is this, derivatives is a function of cash segment prices. Derivatives prices are a function of cash segment prices. The number of players in the cash segment are much lesser than the number of players in the derivative segment. So there's a natural opportunity out there, mess with the cash segment and make outsized profit in the derivative segment. And it is that is clearly falling in the realms of, if somebody does that on purpose, it forms in the lands in the realm of manipulation. Now it seems the way Jane Street has traded, they have done trades in cash market. It seems are the allegations just for the purpose of making outsized profit in derivatives. It doesn't seem like a normal arbitrage transaction. You were like 25%, 30% of the market. The way you were trading, when in the morning session, the cash segment, you were leading to positive LTPs. In the evening session, there was aggressive selling leading to negative LTPs. You have tons of money to give as margins. You have tons of money to take as stock. This doesn't look like a normal transaction. And if the courts rule and as the arguments go, it turns out that they were actually innocent, it was just normal, fine. But prima facie, given experience, this doesn't look like such a clear-cut case of regulatory overreach. This is a very challenging situation indeed.
Okay, so, you said that these were not normal transactions, but intentional trades in the cash markets to move the index. So,
no, I will say it could be.
It could be. Yes, yes. Okay. So, what specific signs or patterns then would make it clear to anybody or even to brokers that such trades are meant to manipulate rather than hedge or arbitrage?
No, I would need a PhD for that, but I'll still make an attempt. So, and I'm trying to keep it simple. The way the options are priced, all right? There are formulas that price options. There are implied volatilities and expected expected values of all prices.
Yeah.
Typically, when a trader tries to trade odd, then you'll see a change in the actual implied volatilities. All right, this is not trading as per vol. That's what I don't want to get into too much details. Even my knowledge is limited. But then usually patterns come out. Second thing that comes is when you see crazy price movements in the cash segment. All right, that gives it, because that will lead to crazy price movements in short period of time in the derivative segment. And finally, the test is, have you been doing this regularly? If this kind of trading pattern is something I'm doing from the last 15 years, or last 5 months, or last 5 weeks, every day this is a strategy I follow, and my trade patterns can show, it is obviously, it is just a coincidence. But then on particular days, there's a particular way of trading, where then all the regulatory alerts go off. That's what I do in my office myself. One of the things we do is we have a surveillance for our client trading. And as long as the client is trading normally as he always trades, we are usually more comfortable. It's the odd trading behavior that gets our attention.
Correct. And not just the one-off trade, right? Many odd trades then put together. Okay, let's understand what this means for the Indian markets then. Manishi, is this case, would you say, reassuring for global funds, or would you say it's a cautionary tale?
I think, it means, well, let's first look at what, the Indian regulators, Indian market participants need to do to increase confidence in the market. First, of course, there has to be increased vigilance on the part of the regulator. This has been happening for more than 2 years, I think close to 3 years. It came to light, it came to everyone's attention, not because of anyone who detected it, in the regulator's office, but because of a lawsuit that was filed, against another hedge fund, high-frequency trading fund. Who knows? If that lawsuit hadn't been filed, maybe no one would have noticed it, even now. But at the same time, if you look at the same example, January 17th, yeah, the previous day, the previous evening, HDFC Bank had declared results. They were disappointing, so it was supposed to have depressed the cash market in banks, the bank Nifty in particular. But what happened was a disproportionately strong movement in the bank stocks, in the bank Nifty the next day. That should have been a red flag. But it wasn't highlighted. Well, the whole thing unraveled after the lawsuit in, I think, April 2024. So that's point number one. Stronger vigilance on the part of the regulator. Second, investor education. More than 90% of the Indian retail option traders make losses. This is a zero-sum game, but they still keep trading it, and they get butchered. They get slaughtered by the sophisticated, humongously large traders who have sophisticated algorithms, amazingly powerful trading infrastructure at their disposal. So I think a lot of investor education has yet to happen in the Indian market.
All right. Okay. So given that, what you're saying, Manishi, that HDFC Bank's results were announced the previous evening, do you think that the sharp movement that we saw the next day was a rational market response, or did it appear exaggerated compared to historical reactions to similar news?
Well, it did appear exaggerated, no doubt. And that's what I'm saying. That should have been a red flag.
Okay. So, J.N. Gupta, sir, is this then a turning point in how SEBI regulates high-frequency trades and expiry strategies, would you say?
Yeah, I would say that every mishap in the market is a learning lesson for everybody, an opportunity to take corrective action.
Sure.
If somebody says that SEBI should take all the corrective action today and there should be no problem in the future, it will be a foolish expectation, because money is such that it drives innovation. Sometimes innovation in the positive side, sometimes innovation in the negative side. So nothing is going to happen to high frequency trade. It will continue. People will become smarter. The people who want to cheat will become much more smarter. The regulator will have to follow up. But this cat and mouse game will continue. But long term, there is not going to be any change in the market, in the sense that you will say that all the liquidity will dry in the options and futures market. No, it is not going to happen, because there will always be two types of people. One who wants to cheat the market, one who wants to continue to participate in the market. So this battle will be never-ending battle.
Okay, so then in that case, Uttam, what role can brokers play in flagging such kind of unusual behavior? Is there a pattern that others should be learning from?
It's actually my job as a broker. If any clients are trading in a particular pattern, I need to flag it to the authorities, the front level regulators, which we are supposed to do. Having said that, there's one point I need to highlight. This is a very interesting line in this order, where in February, the SEBI asked the exchanges to actually write to Jane Street and issue a caution letter. Ki, boss, you are a great player, you are a large player, nice to have in the market, love your trading, but I think you're trading silly. In my opinion, please stop, please desist, please, this is not proper. That was actually a very mature thing. I've never heard of the regulator behaving in such a manner. And in spite of that, when they saw it, this guy is not changing, and so they went for this action. This was actually a surprise for me, and I love that approach that SEBI followed. Having said that, as brokers, I need to, all of us brokers need to keep our eyes open, and that we will do.
So if I were to ask you, give me your sense of what reforms might this trigger, whether it's real-time surveillance, whether it's new expiry day rules, limits on index weight manipulation, what would you say?
See, if there's a rampant problem in the market, you need to go after it. But you cannot make policies to handle exceptions. So the challenge for regulators, or actually they have the data to see, hey, is it a couple of people who are behaving in this fashion, or it is just a rampant issue? And if it is exception, then it doesn't require a strong regulatory policy response. As far as surveillance is concerned, that you have to do, that you always have to do. Surveillance, supervision is something that's a basic need 24/7 all the time. It is not a function of an event happening or not. But so far it seems that from my market sources, there's only one gentleman, one firm which got a caution letter, and not more than one. And it doesn't seem to be a rampant concern issue from the regulatory point of view. But then let's see what the future holds for us.
Absolutely. Let's see. Manishi, considering that some forms of market manipulation, particularly, I would say, in this case, that are easier to detect, like a pump and dump, and others are much harder, like a spoofing or a layering, what should be then the priority for investor protection in India?
Well, I think most of these mechanisms, along with the regulator and the exchanges, they're already in place. It's not that something additional needs to be done. It's only, possibly, making the people who are actually in charge of vigilance, making them more aware, stronger training, etc. But, at the same time, I think some of these more blatant instances, which has been happening over 3 years, perhaps could have been detected earlier. And it's kind of a coincidence in a sense, if I may use that phrase, that it's been detected because of the lawsuit that was filed. I think strengthening vigilance would obviously be a degree of assurance to the retail investor. Coming back to your original question, does it reduce confidence on the part of the international investors in the Indian market? I clearly don't see such possibility. This has happened, no doubt. In fact, much worse instances have happened in other markets, including more developed markets. And even in conversations with the institutional investors that we have regularly, I think this is being treated as an aberration. It's a bug, not a feature, to use technological language.
Okay, so J.N. Gupta, and I'm out of time, so I'm afraid this is going to be the last question. What would you say is the takeaway from this entire case, whether it's from a retail investor standpoint or for foreign institutions?
See, the takeaway is very simple. For retail investors, you do not have wherewithal of the institutional investors' knowledge or vision something. So do invest in options futures at your own peril and only when you understand it well. That is one. For institutional investors, keep your eyes and ears open, and if you smell anything like Jane Street happening on the street, please go to SEBI and say that you smell a rat. So that will be a better thing than doing anything. But I wish that everything continues the way it has been continuing. The aberrations will keep on happening. Let us not be derailed by that.
Okay, thank you so much to all of my panelists that have joined me this evening and for breaking down what appears to be a complex case, but Uttam rightly saying that it's actually quite simple. So thank you so much for simplifying that. This case is obviously more than a number, and a whopping number at that. It's about how markets are shaped, how trust is built, and how power is held accountable. SEBI says this was manipulation. Jane Street says it wasn't. That legal battle will play out. But what's clear is this: India's markets are no longer a playground for unchecked strategies, whether domestic or global. Surveillance is sharper, enforcement is faster, and the rules are the same for all. That's what builds credibility, and that's what builds India's capital markets. And that's the big message on The Big Question tonight. Thanks for watching.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज़, और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in?
Hello and welcome to this Tuesday edition of the World Report with me, Arjun Samar Mahendra. US President Donald Trump said Monday that the United States will hold talks with Iran. Now, Trump said, and I quote here, they've requested a meeting, and if we can put something down on paper, that will be fine. It'll be good. Trump's Middle East envoy, meanwhile, Steve Witkoff, has said the meeting will take place in the next week or so. Meanwhile, listen into what Donald Trump had to say.
We have scheduled Iran talks, and they want to talk. They took a big drubbing. I think when we hit the three sites, really, I would say the three sites, not just the one. The one was a big one, and it was deep in granite, and it was obliterated.
Meanwhile, my colleague Vishal Vivek joins us for more on this. Vishal, Witkoff hinting that there'll be talks this week itself, and Trump at the same time not sounding too convinced by the entire idea. What can we expect from these talks?
But Arjun, at the same time, Trump has confirmed that there will be talks indeed, and there were speculations that when these talks would happen, so there's a timeline on that as well. Now we know that the talks could happen in the next 7 days or so. What could be discussed in the meeting, that is to be seen. There could be several things discussed, because Trump has also hinted that there could be sanctions relief for Iran. Iran has been weighed down by sanctions for decades now. Its exports have been plummeted throughout the time in the the recent past as well. So that will have to be figured, and both the sides have been had been talking regularly in the recent past, but after the attacks conducted by Israel and US on Iranian soil, those talks had gone into disarray. So if those talks again realign, that will have to be seen how quickly both the sides can get on the table and arrange for some level of agreement, so that the all important US-Iran nuclear talks could progress further.
Of course, thank you so much for putting things in perspective for our viewers there, Vishal. Moving on, an Indian family of 4, including 2 children, were charged to death after a truck crashed in their vehicle in Dallas on Monday. Now, the Hyderabad-based family, identified as Tejaswini and Sri Venkat, and their 2 children, in fact, were reportedly on a vacation in the United States. Now, they had driven to Atlanta last week to visit their relatives and were returning to Dallas when the incident took place. My colleague Uma gets the latest.
Extremely tragic incident of these 4 members of an Indian family who died because their car went up in flames. What we understand is that Sri Venkat and his wife Tejaswini, along with their 2 children, 2 school-going children, had gone on a holiday to the US, and they had gone to spend a week at Atlanta with some relatives. And when they were returning from Atlanta to Dallas in a car, we understand that their car met with a head-on collision with a mini truck in a place called Greene County. The truck is said to have been coming in the wrong direction, and the impact of the accident was such that the car went up in flames and there was no opportunity for anyone inside to escape the fire. So while people passing by have shot certain videos of the car going up in flames, no one could be saved from the car, and therefore the police there saying that they will be conducting DNA analysis of whatever bones or other materials that are left before handing over the mortal remains to the family. In Hyderabad, where the family is said to have resided at Kompally, which is called also Suchitra, in that area I spoke to the local inspector, and he said that while they have information about the accident and the place where they were residing, no one had come forward to seek any kind of a help from the local police as of now.
Staying with the US, a flash flood in Texas killed more than 100 people over the 4th of July holiday weekend, and in fact left others still missing. Now, this includes girls attending a summer camp. The devastation has drawn a massive search effort as officials face questions over their preparedness and the speed of their initial actions. Now, the floods grew to their worst at the midpoint of a long holiday weekend when many people were in fact asleep. Survivors have described the floods as a pitch-black wall of death and said they received no emergency warnings from the administration whatsoever. US military troops and federal immigration officers made a mighty but brief show of force Monday at the MacArthur Park, dubbed the Ellis Island of the West Coast. Now, this as the community hub of a largely immigrant neighborhood in Los Angeles. About 90 National Guard troops and dozens of federal officers descended on the park in the morning that was nearly empty after word spread of a potential raid. Even as he slapped fresh tariffs in 14 countries, US President Donald Trump on Tuesday said the country was close to making a trade deal with New Delhi. Trump said, "We made a deal with the United Kingdom, we made a deal with China, and we are close to making a deal with India now." He also added that letters stating fresh tariffs were sent to other countries. Now, his remarks come after he announced new trade measures with countries including Bangladesh, Thailand, South Korea, and even Japan to come into effect starting the 1st of August. Trump has slapped new tariffs in 14 countries with some as high as 40%. Myanmar and Lagos have taken the biggest hits, facing 40% tariffs. Now, other countries like Japan, South Korea, and even Indonesia are also on the list. They're all part of what Trump calls a plan to fix unfair trade deals and to protect US jobs. Now, Trump said letters to major trading partners, including Japan and South Korea, dictating new blanket tariffs. The letters, which caused US stocks to tumble, are a message to those countries where White House officials don't believe that trade talks are going particularly well. Now, this was confirmed by a former trade negotiator. The notices also deal a blow to hopes that Trump will scale back tariff threats and de-escalate trade war, some experts argue. Meanwhile, listen to what Trump said, followed by Caroline Levitt and the White House.
Are the tariff letters that you sent today final offers, or are they negotiable?
More or less final offer.
So South Korea, Japan should take it or leave it?
We're always subject to negotiate something that's fair, but we've talked to most of the countries, and pretty much they've had their way for many, many decades, as you know. And it was time that we just wanted fairness. This is not really equitable from our standpoint, because it's just a small token by comparison to the damage that's been done over the years. But we had no other president that was willing to do this. I did it in my first term with China and others. We took in hundreds of billions of dollars of tariffs. No inflation, the most successful period of time that we've ever had financially in the country. The first term. I think this term is going to be much better, even much better than that. That was the best ever, and this is going to be, I think, substantially better. And we're on the way to doing that.
There will be approximately 12 other countries that will receive notifications and letters directly from the President of the United States. And weeks ago, I stood at this podium and I told all of you that the President was going to create tailor-made trade plans for each and every country on this planet. And that's what this administration continues to be focused on. The President will also sign an executive order today delaying the July 9th deadline to August 1st. So the reciprocal tariff rate, or these new rates that will be provided in this correspondence to these foreign leaders, will be going out the door within the next month, or deals will be made. And those countries continue to negotiate with the United States. We've seen a lot of positive developments in the right direction, but the administration, the president and his trade team want to cut the best deals for the American people and the American worker.
On the other hand, China has warned that the Trump administration on Tuesday, it has in fact warned the Trump administration on Tuesday against reigniting trade tensions by restoring tariffs on its goods next month, and has also threatened to retaliate against nations that strike deals with the US to cut China out of the supply chains. Washington and Beijing agreed to a trade framework in June that restored a fragile truce, but with many details still unclear, traders and investors on both sides of the Pacific, in fact, are closely watching what follows. Meanwhile, Benjamin Netanyahu says he still plans to travel to New York City or NYC, despite the US Democratic Party's nominee for the mayor of the city, Zohran Mamdani, in fact, pledging to arrest the Israeli premier, citing the ICC arrest warrant against the Israeli Prime Minister. Now, when asked if he's concerned about Mamdani's pledge, Netanyahu told reporters before his dinner with Trump that he is not concerned about it. Meanwhile, Trump assured Netanyahu that he would get Mamdani out. And PM Narendra Modi is in Brasilia. Fresh off the BRICS summit in Rio, PM Modi kicked off his state visit to Brazil. Treated with a vibrant samba reggae performance and a warm welcome from Brazil's defense minister, Modi called the Rio leg productive, praising the BRICS talks with his meetings with global leaders. Now in Brasilia, the PM is set for big talks with President Lula Ignacio da Silva. Now this also includes everything from trade and tech to defense, health and energy as well. And the Indian diaspora, well, they're fired up to welcome him at every stop, as you see on your screens right now. Now these visuals, viewers, are testament, one, underlining the fact that from Rio to Brasilia, India's global push is in full swing. Meanwhile, we spoke to an international relations analyst from Sao Paulo. Here's what he has to say.
Narendra Modi's visit to Brazil in the 2025 BRICS summit is marked by a very strategic milestone in India's global outreach and a calculated effort to reposition the bloc within this evolving multipolar order. It was the first official state visit by an Indian prime minister in many decades, and it came with substance, agreements on trade. Also, we can't leave out renewable energy, agriculture, security cooperation. But I think that beyond the bilateral deliverables with Lula, Modi's presence, I think it sends a very important message that India intends also to lead the BRICS, not only as a passive member, but as a pragmatic and autonomous actor committed to institutional reform and the demands of the global south. And I think also in this context, it's very important for the bloc that I think has this little, I think we could call it this autocratic face. A lot of people, especially people from Europe, in the United States, they say that that's how the BRICS bloc, it looks like a bloc that is formed by autocratic governments. It's very important that Brazil is there alongside with India as well as South Africa, and give the bloc this more democratic dynamic.
In a dramatic White House moment, viewers, Israeli Prime Minister Benjamin Netanyahu surprised Donald Trump with a Nobel Peace Prize nomination letter and also handed it over to him on the spot, as you see there right now. Meanwhile, Trump, clearly surprised, called the nomination very meaningful. Meanwhile, Netanyahu has backed Trump's Gaza plan at a press event. In fact, he praised Trump's idea of a free choice, saying Gazans who want to leave the war zone should be allowed to. Meanwhile, my colleague Vishal Vivek joins us to shed light on what Trump's plan for Gaza actually is. Over to you, Vishal.
So Arjun, this plan of Trump was proposed way back in February this year. So according to that plan, the US authorities will move about 2.1 million Gazans out of the enclave. This is what the main agenda of the whole plan is. This is of course being discussed. It's not been formalized, and there have been several backlash also about this. They want to transform this enclave into a Riviera, is what Trump had claimed, and the proposal had been dubbed serious violation of international law. So this is what the reaction had been from the Gazan authorities, and some Middle East nations have also rejected the plan, especially Egypt and also Saudi Arabia. Saudi Arabia seems to be one of the biggest allies of US, but it has nonetheless rejected the plan. And according to a local poll conducted by CNN inside US territory, this is one of the least popular Trump actions or proposals in his history. And also according to the same poll, 58% of the pollsters described the plan as a bad thing, and only 13% of the pollsters supported this plan. So that goes to show this is not a very popular proposal from the Trump side. It will have to be seen how this unfolds and how the world actually accepts this.
Thank you so much for getting us the latest there, Vishal. Meanwhile, PM Modi's visit to resource-rich Namibia this week reflects New Delhi's desire for more critical minerals, analysts are arguing. Now, during the trip, which follows PM Modi's stop in Ghana last week, the Premier is expected to discuss access to critical minerals, uranium supplies, and, of course, the diamond trade. Amid continued turmoil and confusion over his threats to tax foreign imports into US, President Donald Trump held out a new warning to any country aligning themselves with the anti-American policies of the BRICS bloc. They'll be charged an additional 10% tariff without expectations, Trump said. China on Monday said the BRICS grouping is not seeking confrontation, responding to US President Donald Trump's threat to impose an additional 10% tariff on countries aligning with the bloc's anti-America policies, so as he claims. Listen in. Russia's transport minister was found dead from a gunshot wound in an apparent suicide, investigators said Monday. Now, news that broke hours after the Kremlin announced he had been dismissed by President Vladimir Putin. The Kremlin did not give a reason for the firing of Roman Stralovoy, who served as the transport minister since 2024 May, and it was uncertain when exactly he died and whether it was related to an alleged embezzlement case, as some Russian media are suggesting. Meanwhile, foreign tourists are trickling back to China after the country loosened its visa policy to unprecedented levels. That's correct, viewers. Citizens from 74 countries can now enter China for up to 30 days without a visa. It's a big jump from previous regulations. The government has in fact been steadily expanding visa-free entry in a bid to boost tourism, the economy, and its soft power as well. Over 4,000 people, including women and children from Myanmar, fled to Mizoram in the last few days and have in fact now taken shelter in two locations of the Champhai district in Mizoram's Champai districts, officials said. Now, officials are also saying that the refugees started entering the state through areas of eastern Mizoram's Champai district since the 3rd of July, following violence between two ethnic groups in the neighboring country. The Assam Rifles, meanwhile, have been safeguarding the India-Myanmar border and recently have also stepped up the security efforts. Shipping Minister Sarbananda Sonowal has said that the distance between Mizoram's Aizawl and West Bengal's Kolkata will be shortened by a whopping 700 kilometers by 2027. Now, this comes as India, with the help of Myanmar, will be able to operationalize the Kaladan Multimodal Transit Transport Project, or the KMMTTP, by then. The project will be India's alternative to the Chicken's Neck and will help bypass Bangladesh. Here's more.
And Kaladan River, 159 kilometer up to Palatue, and from there to the Indian border, Mizoram. So 110 kilometers, like on a road part that is under construction. By 2027, it will be completed. So definitely entire out of the Act East policy announced by Honorable Prime Ministers. The target is very clear. We should make all the available opportunities properly explored so that a northern region can be accessible to the global market.
Police in Kenya clashed with demonstrators on Monday during the latest anti-government protests, killing 10 people, according to state-funded Human Rights Commission. Authorities, meanwhile, blocked major roads leading into the capital, Nairobi, and most businesses were also closed amid the strictest measures yet, in fact, to contain the unrest. Protesters lit bonfires and threw stones at police. Here's more.
The reason we are protesting is because the government we are still trying to get this together here so that we can listen to the people, and nobody's listening. So that's why you're protesting. Extrajudicial killing, we can see corruption in the government, and nobody's in anywhere.
It's time we step into a short break. Much more on the other side.
जनता के पास सवाल ही सवाल है। जवाब ढूंढने को वो देखती है न्यूज, और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है। बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
Welcome back. You're watching the World Report. Now, stock markets slipped in Asia on Monday amid confusion as US officials flagged a delay on tariffs but failed to provide much detail on the change. While oil prices slid as the OPEC Plus opened the supply spigots more than expected, the US, meanwhile, is close to finishing several trade agreements in the coming days and will notify other countries of higher tariff rates by the 9th of July, President Donald Trump said on Sunday, with the higher tax rates to take effect on the 1st of August. The Badshahs of Birmingham, or Team India, have pulled off a sensational victory, defeating England to level the series 1-1, and in fact ending the 68-year-long wait for a win at the Ek Bastion. Leading from the front was captain Shubman Gill, rewriting the record books in style. Here's what he said after the match.
Yes, I think sometimes, especially when you are the captain, I think you need to lead by example so that whenever there is another player in that situation, you can command to that player, this is what the team requires right now, and you always have to put the team first rather than your personal desires, or sometimes you want to try some things. But I think if you put the team ahead of you, you would always walk in the right direction or walk on the right path, and that's what I wanted to do in this match. If a good ball gets me out, it gets me out, but as long as I am there, I want to play as long as possible.
Over the past few years, Carlos Alcaraz has made it abundantly clear that he is looking for a relationship. But that can be difficult given the nature of his job, as we all know it. But now tennis star Emma Raducanu breaks the silence as far as the Carlos Alcaraz dating rumors are concerned. We get you more.
Yeah, he messaged me and asked me to play, and I mean, I was very surprised and excited, of course. But yeah, it's going to be so much fun, and I've known him for such a long time, so many years. So to kind of share the court together is something really, really special.
Oh, to be in love at the most iconic tennis tournament in the world. London's grass courts ready themselves for the two young superstars of tennis, Carlos Alcaraz and Emma Raducanu, as the duo gears up to play the mixed doubles series. Labeled the Golden Pair, Alcaraz and Raducanu are on their way to compete together in the competition, as speculation on social media swells about the rumored romance between the pair. As tabloids and social media continue to focus on the duo's chemistry off the field, excitement of tennis fans is at an all-time high. All eyes will be on the champion duo. Is this just a story for the headlines? Or will the golden pair actually lift silverware together, fueling the rumors even further? Sriram Ganesh's report for NDTV.
Jurassic World Rebirth dominated the Independence Day weekend box office, pulling in a whopping $318.3 million globally over its first 5 days. Now, this is according to estimates released Sunday. Directed by Gareth Edwards, the Universal Pictures blockbuster debuted on Wednesday and brought in $147.3 million from 4,308 theaters across North America. And hard rock royalty and some 40,000 fans gathered for an ear-splitting tribute to Ozzy Osbourne, or Ozzy as he's called, at what the heavy metal icon says was his last ever live performance. That's correct. The original lineup of Osbourne's band Black Sabbath performed at Villa Park Soccer Stadium in the home city of Birmingham, Central England on Saturday. The 76-year-old singer, who has been diagnosed with Parkinson's disease, sang from a black throne that rose up from under the stage. Let the madness begin, he urged as he took the stage. and later paid tribute to his fans. That's all we have for you on this Monday. Take care and have a wonderful day.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Sectoral indices end mixed, with Nifty Realty as the top sectoral gainer for the third day in a row. Nifty Pharma falls the most, ends lower for the second day in a row on the back of Trump's tariff letters to countries. Sources tell NDTV Profit the India-US trade deal now hinges on political will, not technical negotiations, adding that India's offer has been finalized, but the ball is now in Washington's court whether to approve or not. SEBI moves WeWork India's IPO out of abeyance after putting it on hold for 3 months, but remained under review as of the 4th of June. According to an internal communication viewed by NDTV Profit, Jane Street tells its employees that attempts to engage with SEBI and exchanges since February were consistently rebuffed. ICICI Prudential's Narain is bullish on India, tells NDTV Profit that he expects a massive boom in the Indian economy and could be a growth accelerator when the world slows down. Warns that attractively priced peers are curbing India's FII flows. Sources say the SEBI is in no rush to force options traders to own shares, adding that the regulator is taking their time to study the market and will consult widely before deciding on changes. The alleged mastermind behind the murder of prominent businessman Gopal Khemka has been arrested. The accused trader Ashok Saw is believed to have orchestrated the killing by arranging a contract worth 10 lakh. The Ahmedabad Air India crash, prelim report submitted to the Aviation Ministry by AAIB. The report has been based on initial findings. The Air India flight crashed on June 12 shortly after takeoff, killing over 200 passengers. welcome. Good evening. This is Profit 360 on NDTV Profit, and I'm your host Malika Mishra. Along the next half an hour, we will be bringing you the latest on markets as well as national and international news. To start with, the market saw a mixed day for sectoral indices. Real estate stocks led by Brigade Enterprises and Prestige Estates powered Nifty Realty to the top, while Nifty Pharma lagged behind, posting its second consecutive loss. But for more, let's go across to my colleague Harsh for a market roundup.
Well, for a predominant part of the day, the market was extremely range bound. In fact, we didn't see much movement at all, and therefore a quarter of a percentage point of a bounce that we saw right at the fag end of the day was really met with a bit of surprise. And so we closed a 0.25% higher on an otherwise very, very dull day predominantly. That's the take with regard to the Nifty 50. But what drove that higher was the Bank Nifty, and it was the banking stocks in focus. Kotak with its quarterly update, stock up over 3%. But then there was ICICI, which also kind of pushed and contributed to some of those gains. So a couple of the heavyweights really pulling their weight with regard to where the Nifty 50 is concerned. And if we pull up the intraday on the Nifty Bank as well, very similar chart structure, but the Nifty Bank was trading in a tight band in around the 0.25% higher mark, and therefore it closed around 0.5% higher at close. So again, we saw that bounce where the Nifty Bank is concerned. So that's on the benchmarks. Now let's talk a little bit about what hasn't done well as well. There was a Titan which was languishing in trade today. There was pressure on the back of its quarterly update and numbers, and we've seen retail really swinging either way. Either the numbers have been good and stocks have reacted well, or they haven't. Within that similar same basket is textiles as well, in focus because of a possible resolution on tariffs, which could well spur textile stocks, and we saw some zing on them today. So that's the one other pocket which did well. In terms of the top gainer, we did see good traction within banking, financial services. So some of those counters or sectors did well, but the realty index was the top performer. It was 1% higher, and consumer durables was down over 2% on a flat day of trade. Consumer durables stocks really took it on the chin. So 2.5% lower on the consumer durable index. The other one was the FMCG index, because the move that we saw yesterday in FMCG was extremely strong. 1.5% higher, but today so just a mild negative bias where the FMCG index is concerned. So that was the other one in focus. But outside of that, metals, pharma, very dull day for most of the other sectoral indices. Let's talk about broader markets, and the advanced decline ratio improved a wee bit versus yesterday, but we saw the broader markets continue to remain subdued and under pressure. A recovery from the lows on both the Nifty mid cap and small cap. The texture of the chart for the day on both the mid cap and small cap index very similar, but nonetheless they underperformed the benchmark clearly for a second straight day. So that was the other thing that played out.
Right, as the Indian markets rounded up another range-bound trade of day today, Mark Matthews, head of research Asia Julius Baer, is now bullish on the IT space, who earlier had a gloomy outlook about the IT sector. Listen in as he explains the reasons why he's affirmative.
The outlook for Indian IT was very gloomy just a couple of months ago. The online betting platforms were suggesting something like 70% probability of the US entering into a recession. Now that's down to about 20%. And apart from housing data, where you've got softness in house prices, generally speaking, I think the data in the US is still favorable. We saw that with the non-farm payrolls last week, which beat expectations. So I would say that the outlook for the US looks better, and that's not yet been reflected in commentary from the IT companies, but I would expect them to start to speak more positively about their operations in the US. So generally, I think it's looking better than it did a few months ago.
WeWork India's plan to go public is back on track, but it's not a done deal yet. After being paused for over 3 months, the market regulator SEBI has moved the company's initial public offering out of the temporary hold. However, as of June 4th, the IPO is still under review and hasn't received final clearance. To tell us more about the company's IPO status, I'm now being joined by Agni Dev Bhattacharya on the phone line. Hi Agni, could you please tell us the recent updates that you're kind of gathering on this particular IPO.
Right. So WeWork India's IPO has been moved out of abeyance after over 3 months. Remember, the IPO was put on hold in March of 2025, and it hadn't been moved out of there till now. So just to be clear, the IPO is out of abeyance, but the draft papers are still not approved by SEBI, which means there are a few steps before we can actually see any update with regard to the IPO. It's just a procedural step where it is moved out of abeyance. So now there can be positive movement expected. Now, we had earlier reported a possible reason behind this hold-up from SEBI's end, where a coffee day fraud was supposedly behind the IPO being put on hold. So SEBI had put the IPO on hold after flagging disclosure norms in Embassy REIT. Remember that both WeWork and Embassy REIT are backed by the Embassy Group. And while reviewing the DRHP, SEBI said that Embassy has delayed disclosures regarding a case involving its ex-CEO and embezzlement in Coffee Day Enterprises. Now, we had also told you and gathered from our sources that Embassy Group was said to be working with SEBI to get the necessary clearances, and the IPO could be moved out of abeyance anytime soon. Now, to talk about the IPO, it's going to be a pure offer for sale. As per the DRHP, Embassy, Buildcon and WeWork Global will offload up to 4.4 crore shares through the IPO. And since this is a pure offer for sale, the company will not be getting any funds. So we'll keep tracking this offer closely, and as and when updates come in, we'll keep letting you know more on this.
All right. So while WeWork IPO is closer to its IPO deadline, but it has to take a few more steps and get more clearance. But moving on to an international story, all eyes are on Washington as sources indicate that a crucial trade deal between India and the United States of America now hinges entirely on political will. Rather than further technical negotiations, India has reportedly finalized its offer, putting the ball squarely in Washington's court for approval. My colleague Rishabh is now here with more details on this.
The deal is now very much hinging on political will and not technical negotiations. A final offer has been made to the US, and what is being expected now is an approval or denial of that deal from Washington. What we've seen is that consistently India's focus has been its key labor-intensive sectors. Those are leather, footwear, as well as textiles. Apart from engineering goods, gems and jewelry, those are the key sectors that India is looking at tariff reductions for. What we've also seen is that the US is unlikely to offer any sectoral tariff exemptions. So steel, auto, aluminium, those we've also seen in the letters that Trump sent to about 14 countries, those letters also said that these sectoral tariffs will be continued to be levied separately. What we've also picked up is that this mini trade deal will only cover goods. It won't cover services or IP or any of these broader sticky points. Those will be discussed at a later stage in the first tranche of this trade deal that is expected in the September-October period. What we've also said is that given that this tariff deadline has shifted now from July 9 to August 1st, India will have that extended window in case it doesn't like some of the aspects in this trade deal that it is signing with the US shortly. And that gives some room for extra negotiations as well.
Right, thanks for that, Rishabh. And the global trade landscape is once again shifting, with US President Donald Trump setting a firm August 1st deadline for new tariffs. He confirmed that letters have been sent to 14 countries, many of them in Asia, informing them that higher import duties will kick in on August 1st unless they reach a trade deal with the United States. This includes major economies like Japan and South Korea, both facing 25% tariffs on their products. Other Asian nations targeted with new tariffs include Myanmar with 40%, Thailand with 36%, Indonesia with 32%, and Bangladesh also with 35% tariff. This is the second time President Trump has set such a deadline, having previously postponed tariffs in April for 90 days. President Trump indicated that while some tariffs might be adjusted if countries present valid reasons, these letters are more or less the final order offers. He stated the US is close to making a deal with India and has already made agreements with the United Kingdom as well as China. With the trade deal negotiations still hanging in the balance, investor sentiment remains clouded in uncertainty. Earlier today, we caught up with Edward Yardeni, president of Yardeni Research, and Rob Subbaraman, who shared their perspective on just how long this ambiguity might linger. Take a listen.
I think Trump figured that the U.S. is the world's largest economy. The U.S. is the world's biggest importer. It's the biggest customer for a lot of countries, including India, and that would lead to very quick deals. But it hasn't quite worked out that way. And Peter Navarro, his trade representative, back in April 11th, said, we have 90 days of postponement of Liberation Day, and we'll get 90 deals in that time frame. Well, as you pointed out, we only have 2 deals with the UK and Vietnam and 1 framework with China. So it hasn't been easy at all. Countries do have their own self-interest. They're not just kind of going to roll over and do whatever the President Trump wants them to do. And so I think he's going to have to kind of declare victory by coming up with some vague agreements that don't necessarily address all the specifics, like dairy issues with India. There are a lot of issues when it comes to trade. If you really sit down and negotiate a trade deal, it could take 2 years because there's so many details involved. There's so many domestic interests involved. It's not easy. And to assume that this could all be done in 90 days was rather